I see the economy slowing, not stalling.
It looks to me as though the economy is going to be particularly strong this month.
We are landing in a different set of labor market conditions that is different from where we left.
If the economy is really slowing, we should see the inflation numbers continue to move lower, and we haven't.
The important story is that I think the economy is evolving in a way that the Fed may not be anticipating.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Tuesday after snapping a 4-day losing streak on the S&P 500. Equities fighting just a little bit more of a firmer footing. Equity futures right now look a little something like this, down by 0.08% on the S&P 500, softer by 0.25% on the Nasdaq 100. It is debate night in Philadelphia a little bit later on. We'll talk about the politics in the United States in just a moment. We need to talk about the politics in Europe. 2 headlines overnight. One on Apple, another on Google. Here's the one on Apple. Loses the EU top court fight over a 13 billion euro Irish tax bill. Google loses an EU court fight to overturn a 2.4 billion euro fine. Those stocks not doing much in the pre-market, but this very much is Europe against US tech.
Which has been going on for quite a while. The fact that that Vestager won this particular suit is compelling at a time where she's got a lot of pushback internally from Europe as well. The argument here is that essentially this is an unfair and sort of covert state subsidy, namely Ireland, how much Ireland has come into contact. But this is an example. Do first and apologize later, because a lot of those tech companies are staying in Ireland, and I think that that's the interesting aspect.
There's a lot of lessons to take from this. If you hear any more about potential court proceedings, antitrust violations in Europe, just remember this can take years to settle. This goes back to 2016. And back in 2016, Tim Cook called this total political crap. And here we are in 2024, and 13 billion euros to Apple now is a whole lot less than it was all those years ago.
Absolutely. And going back to 2016, you had Donald Trump coming out and saying Margaret Vestager hated U.S. companies. I actually asked her about that, Jonathan, in April, and she said, I never actually met Trump, and I have a lot of respect for U.S. companies. What's interesting to me is the Google part of this, because they're using a precedent that existed already to sue Google for this. But now they have the Digital Markets Act. She has cemented this anti-competitive legacy in the European Union, and the EU now has even more tools to go after big tech.
So wouldn't it be great to have this wonderful, in-depth discussion, sophisticated conversation about policy on a debate stage in Philadelphia at 9 p.m. Eastern Time when Harris and Trump face off with each other? We can talk about what's going to happen with Khan at the FTC. We can talk about what's going to happen with all these antitrust issues, Bramo. The stage is set for a real in-depth conversation later on.
Yeah, I'm looking forward to it. Let's just leave it there.
It's not what we're going to get, is it?
Honestly, obviously, we're not going to get that. It's going to be about tone. It's going to be about basically seeming presidential. It's going to be about who is Kamala Harris after all, and can Donald Trump keep himself together and kind of present himself with a policy focus? No one's going to actually talk about those policies. And oh yeah, by the way, as we've been talking about, even if they do talk about policy, we'll be talking about whether or not they're actually going to implement that, or whether that's sort of setting vibes to a certain constituent in order to get elected.
It's definitely going to be about style, not about substance, but it is an important debate. And I go back to the New York Times Siena College poll over the weekend. And what stood out to me was under the hood. 28% of likely voters said they need to know more about Harris. Only 9% more said they need to know about Trump. People want to get to know who she is. Governor Josh Shapiro said this to me as well. There's propensity in Pennsylvania. People come up to him. There's curiosity. What does she stand for? And she has a moment tonight to do that. And it's important because she only sat for one interview. And at the moment, this is the only debate that these two will face off.
Well, given the fact she's only sat for one interview, what's the strategy here? Is she hoping people don't find out?
Well, the strategy here is that she style over substance. This is why the Kamala Harris camp really wanted the mics unmuted. That moment for her to try to goad Trump into a combative face-off. Remember, that worked in her favor against Vice President Mike Pence during that debate, where she said, I'm speaking. And that resonated especially with a lot of women. She's not going to be able to have that moment with the mics muted.
Will there or will there not be a fly? That is what everyone wants to know.
Is that like the one thing you want to know?
Look, no, I think that a lot of people are expecting her to talk about the economic policies, emphasizing the middle class. People are looking at abortion and how Trump is going to handle that. People are going to look at immigration and how she handles and foists that, and also how much distance she really puts between herself and the Biden camp, given the fact that she was part of it and yet is trying to have a unique voice.
The main stage, 9 p.m. Eastern Time. time. Later on this evening, look out for that. Equity futures right now, positive to negative. We're down by about 0.04% on the S&P 500. Let's just call this one unchanged. And the bond market not doing much either. 370.60, sort of stable going into CPI tomorrow morning, Lisa, and then PPI after that.
There's been a reset as people ratchet down some of the expectations for a 50 basis point rate cut. We're doing cuts now. What I think is interesting is that Atlanta Fed GDP now, their recent update actually was upgraded after the recent jobs report to 2.6%. In the third quarter. You see a similar type of read from the New York Fed. Point being, people who are saying that the sky is falling and that we're in a deep recession and you know, things are falling apart, just are getting reality checks. It's very difficult to say that. And yet looking forward, there still is quite a bit of uncertainty.
It is conference season, and there's been a range of commentary coming from a range of banks on Wall Street. The one that stuck out for me yesterday was the Citi CFO, talking about the nature of spend evolving. It's going from discretionary to more staple type spend. Now, you can make the case that we're not falling off a cliff. I get it, if that's the case you're trying to make. But clearly the nature of spending is shifting, and it's been identified by a major bank here in the United States as just that.
And how people are spending, with what money, is also important, because we saw yesterday the fact that the consumer borrowing actually increased at the most since 2022. Why? Because people are spending by just saying, here's my credit card, and they're not necessarily paying them because you are seeing delinquencies go up. So there are a lot of signs that things are weakening that really are warnings. Question is, and we've been talking about this for the better part of 12 months now, normalization or something more pernicious.
Let's get into it. Here's the lineup this morning. Coming up, Peter Tchir of Academy Securities saying stocks are still at risk of taking out August lows. We'll speak to Steve Pagliuca of Bain Capital on the changing media landscape for sports, and Tom Forte of Maxim Group as Apple launches the iPhone 16 with the promise of AI. We begin with our top story. US stocks looking to rebound after snapping a 4-day losing streak ahead of tomorrow's CPI print. Peter Tchir of Academy saying there is still risk ahead, writing, quote, I'm looking to take out the August lows. I really think there has been a major disconnect between people believing that we had capitulation versus having seen any actual capitulation. Pete joins us now for more. Pete, good morning to you.
Morning.
Taking out the August lows seems absolutely terrible. And then I look at the August lows on August 5th of about 5,100, about 8% south of where we are right now. It doesn't sound so bad. What was it about August 5th that you wouldn't describe as capitulation?
You know, I think a lot of people looked at the VIX hit 65 at 8:30 in the morning. It was a calculation, right? It's no one actually traded VIX futures much above 40. So I think people really took comfort. Oh, we had this VIX hit 65, everything calmed down. There was never really panic in the futures market. There was never panic during the actual trading hours of the U.S. market. So I think people started reloading the boat and saying, oh, we're good. We've had this washout trade, we've had the capitulation. I don't think we've got that. And as we start nearing this, the NASDAQ 100 is already back close to those August lows. I think we push through this. We've got another maybe 10% downside. I don't think we get back to the March lows, but I think there is room for further downside.
You suggest there was no panic. I would suggest in Japan there was panic. The biggest one-day move since 87. At one point that morning, dollar yen had dropped down to about 140, 170. That was a 3% move. Are we suggesting for the global picture that was the tremor and not the earthquake?
Correct. I think really it's the U.S. market that matters. And the U.S., we watched what happened in Tokyo overnight. We got that little bit of panic in the morning. Futures were down, but it actually opened fairly stable, started turning around by the end of the day. Then the next day we rallied. It went probably further than I think we should have, but that was kind of obvious. But everyone just feels like, oh, we've washed out all the bad longs. This is all good. We can really rebuild from there. And I don't think we had that sort of a washout trade. And I don't think we can rally much further until we get that washout trade.
What's the catalyst for that 10% downside and for that washout of those longs?
You know, I think as usual, part of it's just going to be positioning. People have got them positions very long. People have been reloading in the all sorts of vol selling strategies. The one thing I keep watching is NVDL, which is a 2 times levered NVIDIA ETF. I don't understand why we have leveraged single stock ETFs. They make no sense to me. There's a huge drag on performance, just the way they're set up. And yet that keeps getting inflows. And to me, until we see something kind of shake the faith of that trading crowd, that's when I think we kind of see the bottom, and it's not getting the inflows now, and we're having a lot more questions about AI. I think that's going to be the catalyst. Like, is the promise got ahead of itself?
So this is going to be led by big tech, from what you're saying, that you think that this is going to be an ongoing kind of deterioration from the beta trade that we saw earlier. I'm just wondering what the economic backdrop is for this, because some people might say overly bullish, overly complacent. You're saying the sky's falling and a recession is imminent. Is that the case?
No, I think I think the one thing we've now done is actually priced out the soft landing as guaranteed, right? So now I think there's at least some possibility of a harder landing. So I've been looking for a bumpy landing. I think you're going to see bits and pieces of data showing, positives, negatives. It's going to be by industry. It's going to be, regional. This to me is really, again, just about valuations. When I started on Wall Street, first trading day, they talked about options. They said, if you buy an option, it gives you the right to sell high, right to buy low. You get to trade the gamma. And what's everyone want to do? And we all raise our hand, buy options. And they're no, it depends on the price, right? Depending on the price, you want to sell those options because you're getting paid more than that. So I think that's where we've hit on a lot of these stocks. We've moved beyond what's rational in terms of what they can generate, and it's disappointing. And sadly, we talk about markets and these broad markets, but 50% of the indices are really just a handful of companies. So it really does matter what these 10 to 20 companies do.
Where's this concern about the election and politics play into your bumpy landing?
I'm kind of really confused. What are we even going to see tonight? At this point, I haven't bothered spending any time really trying to figure out what either party's policies are going to be, because I don't think we've had any sort of definition. Where I've been working is what I think is going to stay the same, and that is really going to be, no matter who wins, this friction with China, this tech battle is going to continue. We are going to see more and more protectionism around AI, the semiconductor business. I think it goes back to one thing you were talking about earlier, Europe. Europe is not going to be good for AI. Europe's not going to be a good investment vehicle because it's all about constricting and constraint and rules and regulations. So I don't think that's going to be a hotbed of this. So I think ultimately the U.S. is going to do well, but we are going to see friction with China on that. And I think whoever wins is going to have to rebuild the U.S.'s reputation globally. Where do we stand with our enemies? And more importantly, where do we stand with our allies? Do we have 10, 20-year, 30-year commitments, or do we live election cycle to election cycle? So I don't think anything that is going to come out tonight on that, but those are things I'm going to start looking for as we near the election.
A lot of people's base cases is gridlock in Washington, but some of the issues that Trump talks about, like tariffs, we spent a lot of time in this program talking about that, he could do unilaterally on day one. So have a massive impact on what's going on in China. Do you think China is basically waiting to find out what happens with the election because their economy is suffering before they really have some policy moves?
I think everyone's on hold a little bit. They want to see how this plays out. I think everyone has a decent understanding of what Trump does or doesn't do. He says a lot, and then he tends to back down. We're not sure what Kamala is going to do. I think people want to see what she's going to be like. And will she be easier to negotiate with, right? Will people prefer to negotiate with her, or will they prefer to stick to Trump? So right now I'm kind of discounting everything both sides say. And that is probably, I think, one thing is we're all kind of assuming split tickets. If there's something that comes out that one side is really going to win completely, then I think that changes the narrative for Wall Street. Then we have to pay a lot closer attention to the risks.
Let's just park the politics just for a moment, just to wrap this up. When I walk away from listening to this conversation, Lisa correctly identified that you see tech and the AI trade as the biggest risk. A failure to demonstrate where this return on investment is going to come from. Was the Apple unveiling the beginning of that yesterday? Do you think it was?
It did not seem to give that excitement, but you've seen some of the earnings come out. Oracle had great earnings last night. They're up, but yet the NASDAQ 100's down a little. Futures are down a little bit this morning. So I think it's taking more and more to get that story. The one positive thing I'll say that I keep an eye on is Walmart did come out and say that AI really helped them with their quarter and in their planning. So I need to see more of that to believe it. And right now, what I'm seeing is a lot more people, I think, who've been struggling through using these LLMs or generative AI. They all keep coming back like, is it there yet? And since the cost rose so quickly with the cost of chips, the cost of getting data centers, electricity, that I think the risk reward or the cost benefit's not there right now, and I think that's what we'll see some slowing down on.
Peter Tchir looking to take out the August lows. Peter Tchir of Academy Securities. Peter, thank you. Appreciate it, sir. Equity futures slightly softer here. We're down 1/10% on the S&P. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The U.S. House of Representatives passed legislation last night to blacklist Chinese biotech companies and their U.S. subsidiaries. The bill's backers argue that the law addresses concerns over security. Those concerns, though, were denied by two Chinese biotech companies. They said that they don't pose a security risk to the U.S. or any nation for that matter. The bill now goes to the Senate. AstraZeneca shares falling in the London trade, down 4 1/3% over the past 2 days. It is their biggest one-day drop in 7 months. The British pharmaceutical giant announced disappointing results for its lung cancer drug trial. AstraZeneca said the drug did not significantly improve patients' overall survival results. And Catherine, Prince of Wales, said she is cancer-free after completing 9 months of chemotherapy. In a video statement released by Kensington Palace, Kate said she would resume duties, quote, as and when she is able, and that she is feeling well and looking to the future. The video, filmed in the woods of Norfolk last month, showed Kate on a day out with her 3 children and husband, Prince Williams. And that's your brief, John.
Danny, thank you. More from Danny in 30 minutes' time. Up next on the programme, Harris and Trump facing off in Philadelphia.
In many ways, Donald Trump is an unserious man.
Lion, Kamala Harris, Lion, L-Y-I-N apostrophe.
I took on perpetrators of all kinds. I know Donald Trump's type.
I look forward to the debates because I think we have to set the record straight.
The debate coming up a little bit later from New York City this morning. Good morning. Live from New York City this morning. Good morning. Welcome to the program. Equities just a little bit softer on the S&P 500, down by 0.2%. Yields unchanged on a 10-year, 370.41. Euro dollar right now, 110.36. A call from Morgan Stanley for this to head back to parity. We'll pick up on that call a little bit later this hour. Under surveillance this morning, Harris and Trump facing off.
In many ways, Donald Trump is an unserious man.
Lion, Kamala Harris, Lion, L-Y-I-N apostrophe.
He would use the immense powers of the presidency to serve the only client he has ever had, himself.
I think I'm entitled to personal attacks. I don't have a lot of respect for her.
I took on perpetrators of all kinds. I know Donald Trump's type.
I look forward to the debates because I think we have to set the record straight.
Donald Trump and Kamala Harris taking to the debate stage at 9 p.m. Eastern in Philadelphia for their one and only scheduled debate. The candidates agreeing to a 90-minute event with no live audience, no opening statements, and microphones muted when it's during the other's turn to speak. Evan Roth-Smith of Slingshot Strategies writing, Harris heads into Tuesday's debate still searching for a durable advantage in the states that will decide the election. But with important openings, she can press. Evan joins us now for more. Evan, good morning, sir.
Good morning.
Let's talk about the very specific, highly specific pre-debate polling that you've been conducting. Can you just walk us through it to begin?
Well, this election is increasingly becoming focused on the handful of voters, really only about 500,000 voters, who are going to decide the outcome, right? So these are swing voters, largely independents in 6 states, right? The 6 swing states in the Rust Belt and the Sun Belt that we all know about. And this debate is largely about them. What do they want to hear? What do they need to hear? And particularly, what does Kamala Harris need to tell them to get them over the edge and make this more than just a knife's edge election, where she's clawed back out of the hole that Joe Biden was in and reached basically parity with Donald Trump, where this election could go either way, as just about any analyst or pollster would tell you. And really what these swing voters in these swing states want to hear, at least in our polling that we just released this week, is they want to hear her continue to gain ground on the economy, to press her advantage on prices, right? Donald Trump still has a very narrow advantage, a 2-point advantage overall in these swing states on inflation and jobs. But with independents in these swing states, Harris has a 4-point advantage. These are very close to margin of error, but it means these critical voters are looking to hear on the economy and hear on prices specifically. And she has to mitigate concerns on immigration, where she's still down in these swing states to Donald Trump.
Evan, when you look at the New York Times Siena poll over the weekend, more than 60% of likely voters said the next president should represent a major change from Biden. Do you see that in this polling group that you're going after in the swing states?
So it's interesting. We polled this with independent voters in swing states. Who represents change? Who represents the right kind of change? And voters in these swing states, independent voters, by 10 points say that Kamala Harris is a breath of fresh air. And she is. It's undeniable. She's a breath of fresh air in this race. But by only about 7 points do voters say that she's the right kind of change. She's still more or less more or less tied with Donald Trump on being a change candidate. And that's because she hasn't yet broken in a meaningful way, rhetorical or policy-wise, with the administration. She isn't a change candidate beyond the literal change of who the candidate is. And now, that slight advantage on the right kind of change with independent swing state voters is very good, but she needs to do more. She can do more.
Does she need to completely break with Biden in your polling to win over those voters?
I don't know that it's a complete break with Biden. She doesn't need to. He's the sitting president. He's her sitting president, her running mate in 2020. There is some merit to the idea that she could draw greater distance, particularly on immigration. There's very little downside to drawing distance. But on policy, most of the Biden policy agenda, when it's not tied to Joe Biden, is very popular when you poll it. So how do you break with the president? You can't break with him on policy. You have to break with him in more subtle rhetorical ways. And we'll see what she does. We'll see how she manages that. And you also want to continue to be able to take credit for things that the administration does that is very popular, like Medicare negotiation of prescription drug prices, which is enormously popular, including in these swing states with these swing voters.
How engaged are some of the independents and prospective voters, those 500,000 people that are going to determine the election? I mean, how much are they watching every iteration, looking for policy, trying to understand the two candidates?
Well, that's really what's critical tonight, because those voters are looking to learn. A lot of people who follow politics closely, journalists, practitioners, the kind of people who get up at 6 a.m. to watch the news and get a little edge on everyone else. We know a lot about what's going to come out of their mouths. These swing voters who haven't made up their mind, they're watching to learn. They're not necessarily watching for the repartee, the zingers, and that's why I discount the mics being on or off or anything like that. The voters who will determine this election really, really care about what these candidates are saying. They're looking for substance. They're looking to be educated. They have open questions, largely about Kamala Harris, very, very much less so about Donald Trump. And they want answers to those questions, particularly on the economy, particularly on her immigration policy and how she's going to be different than the status quo. And an important mission for Harris is also to raise the salience of abortion and reproductive rights in this election.
That's what I was going to say. How do you sort of pair those two ideas, the social versus the economic, especially at a time where, frankly, there isn't that much daylight when it comes to certain policies, particularly with China versus the U.S. and other international issues between Trump and Harris?
Well, on foreign policy, Harris is very fortunate in that the part of the Biden administration agenda and policy set that she is tied the least to is foreign policy. So she can kind of do it and say whatever she wants and feel she needs to do and is politically advantageous. It's also true that the vice president has had very little to do with American foreign policy over the last 4 years. Short of Dick Cheney, it's hard to find a vice president who has.
Evan, can we pick up on who she is? To independents, at least. Is this the person that ran back in 2019, 2020? Is she a progressive in moderate clothing here in 2024? How do they see her?
She's not. I mean, when she ran in 2019, it was in a Democratic primary where she didn't even make it to Iowa. She never saw the voters. In 2020, she's a vice president on a presidential ticket. And also, it should be noted, in a year where campaigning was different than any other presidential election in our lifetime, right? She wasn't barnstorming the swing states. Media consumption was very different during COVID. And so she is very much doing her first introduction to voters. We're now a couple months into that introduction, so things are starting to firm up. But this is, we did this test on what policies, what campaign promises that Harris has made do you believe she will try and succeed on, try and fail, and not even try, right? So these are all policies that the campaign has promised to pursue. And on some things, like the child tax credit, voters really believe she will try and get it done. On other things like deficit reduction, she's underwater by a couple points, right?
She's not the only one.
She's not the only one. She's not the only one. I mean, where's the candidate who hasn't promised some form of deficit reduction? But so there are still elements of her record, and the border, by the way, her promises to following up, trying to get the bipartisan border deal done. Voters more or less buy that from her. Surging resources to the border, which is a popular idea that her campaign has promised to do, more border agents. Voters aren't quite sure that she means that promise. So there's reassuring to do. It's less about new promises. It's more about affirming that the things she has promised to voters are real and something she will try.
It's something you imagine the former president will be pushing on pretty hard a little bit later on this evening.
I think they're all just going to be watching the $58 billion auction at 1 p.m.
Is that right?
Yeah, because they're all very focused.
Fixated on deficit reduction.
Make deficits great again.
Evan, thank you, sir. It's good to see you. Let's do it again soon. Evan Roth-Smith there of Slingshot Strategies. Coming up next on this program, Steve Pagliuca of Bain Capital, the co-owner of the Boston Celtics. That's just around the corner from New York. This is Bloomberg. Live from New York City, welcome to the program. Let's kick things off with the scores in the equity market on the S&P 500. Slightly negative, we're down by 0.05% in yesterday's session, snapping a 4-day losing streak. A day of gains with quite a cyclical tilt. The financials doing okay. Energy doing okay, discretionary doing okay. We'll talk about consumer discretionary a lot more throughout this morning. That's the equity board. Let's switch things up and get to the bond market. 2-year yields at the front end of the curve, up again by, let's call it a single basis point. Still sub 370 at 368.52 on a 10-year 371.17. Big focus on US monetary policy and what it could mean for the US dollar. I think we have to talk a whole lot more about the other side of the trade, so let's do that now. Switch up the board, turn a page and get to this story. Euro dollar. Euro dollar right now, 110.37. Morgan Stanley speaking to the team here at Bloomberg. This is David Adams out of London, who runs G10 FX Strategy, suggesting that we could drop back towards parity. Here's the quote. There is plenty of scope for the market to refocus on the fact that the ECB could be cutting deeper, Lisa, and faster than what is currently priced.
They're basically calling for a 7% roughly devaluation, depreciation from current levels for the euro at a time where we're expecting a 25 basis point cut from the ECB on Thursday. But then after that, how much more scope do they have to cut simply because growth is not in any way, shape or form presenting a challenge to them on that level? We've talked about this. People think that the Fed is going to cut more than the ECB. Really? Let's see.
Look at Germany and the data coming out of Germany and compare the data to coming out of the United States. Very, very different pictures. Germany's doing terribly. We're still talking about normalization and not weak in America. And in Germany, we're talking about nothing but weak.
This is the problem. And this is the reason why the ECB may have more scope to cut, especially because they're not seeing the credit demand either. And that's sort of a big challenge. How do you create that credit creation, credit demand at a time where people don't see the optimism going forward? There was a recent EU adjustment to the tariffs. Did you see this overnight? Where they lowered the tariffs for incoming Chinese cars. They're sort of caught between a rock and a hard place right now in terms of how do you get products that bring down inflation and that are cheaper and that actually feed the sort of green revolution, while also not decimating the likes of Germany and their auto manufacturers. And it's a very awkward dance that is not leaving people with confidence.
The euro just about unchanged against the dollar right now. Euro dollar 110.35. Under surveillance this morning, US regulators agreeing to a plan requiring a 9% increase in capital requirements for the biggest US banks. That marks a dramatic retreat from the original proposal that had called for a 19% jump. Fed Vice Chair for Supervision Michael Barr expected to preview the changes in a speech later on today. This versus what it was is a major win for some of the financial institutions across this country.
It said that this sort of resolution to the problems that we saw in the banking sector was completely the wrong way to go and would just weaken them further. So it's a win for them. It's also notable. I do have to point this out. Jay Powell really wanted to seek consensus. And so he was looking for a way to seek consensus. That kind of rhymes with other things that we hear about him seeking consensuses. It's sort of interesting to me that you're seeing it in multifaceted ways.
This has really been a bitter fight in Washington. Lobbyists coming out that represent the banks really trying to lower this. But Jay Powell kind of teed this up when he was talking to Congress earlier in the summer, saying there would be broad changes. It's not going to be at this top level. I'm waiting for the Elizabeth Warren tweet to drop, because just a few weeks ago, she was telling the Fed they need to shore this up, and she was looking at nothing under 16%. So this is going to be a political rallying cry for those in the progressive left.
I think we can guess what the draft already looks like in the unposted tweets over at the Senator Warren account, can't we?
Yeah, and we can also imagine that if Trump gets back into office, he'll probably unwind this and it will never see the light of day. And so you sort of see both sides of the issue coming to the fore.
Let's turn to tech. Apple losing its court fight over a $14 billion Irish tax bill as the EU cracks down on special deals for big companies. The EU's Court of Justice in Luxembourg backing a landmark 2016 decision that Ireland broke state aid law by giving the iPhone maker an unfair advantage. That stock is negative by a little more than 1%. I want to turn to the latest out of China. A deepening sell-off in Chinese stocks is worsening a crisis of confidence in the nation's economy. The CSI 300 index is near the lowest level since January 2019, with Chinese equities trailing global ones for the fourth consecutive year. And the latest data out of China, not pretty. Import numbers out of China basically flat, dead flat almost unchanged.
And this is really the fear of deflation and some sort of deflationary spiral, especially with the stock market wrap that you've seen so far. My question is, does this really push Xi Jinping to actually increase state aid? We haven't seen it yet. Or does it sort of focus more on the nationalism tilt that we've heard? How do you get people to feel like it's a point of national pride to buy your own products and sort of move to some of these other initiatives? In other words, does this make it more dangerous or less dangerous for China versus some of its adversaries and stiff competitive counterparts?
And more or less dangerous for the likes of Apple as well, which we'll return to a little bit later on this morning. The latest on DirecTV and Disney, still struggling to reach a deal. Millions of subscribers were blacked out of ESPN's Monday Night Football, featuring the New York Jets and San Francisco 49ers. The dispute highlighting the shifting power balance in sports and TV. Steve Pagliuca of Bain Capital and co-owner of the Boston Celtics and Atalanta Football Club joins us now for more. Steve, it's good to see you, sir. Thanks for joining us. Thank you for being here. Let's talk about this standoff. What do you make of this current standoff at the moment between DirecTV and Disney?
Well, this is in a long series of kind of the war in media right now, the old media versus the new media, and distributors versus content providers. And we've seen this before. I was involved directly with the Weather Channel that had a big battle, long fought battle with DirecTV as well. And, content providers want the appropriate money for their content, but the distributors are between a rock and a hard place because they're distributors, they don't have content, and they want to maximize the price they can get. So that's what you're seeing now.
What do you think the future of sports distribution is, which is a highly broad question, I know, but what do you think the future is?
Well, I think the future is good because sports is the most watched programs. I think 93 of the top 100 programs in the USA last year were sports events, and so you have to have sports events if you're a distributor to get eyeballs.
Do you see a future where they skip the traditional distributors and these sports franchises just stream directly themselves? Is that the direction of travel for you, or is that too complicated?
Well, it's a great question. It's going to be a battle between convenience and bundling, versus trying to get a la carte anything that you want to watch. So we'll have to watch that over the next 10 years. The good news is that the content providers like the NBA are in good shape no matter which way it goes because content, as I think Eisner said a long time ago, content is king.
Well, just to sort of push that a little further, there's this issue, and I see this with my sons as they digest sports, and they have access to some and not access to others. And do you rather have a generation that is brought up with easily accessible sports and being able to tune in and the popularity increases, or would you rather higher fees from specific streaming sites?
Well, that's the balancing act, and I think you want both because you obviously won't have new fans unless you have broader distribution. If the charges are high, you're going to really shut off your fan universe to the fanatic fans. So you're seeing many deals now where people go on-air TV, plus a distribution channel. So it's kind of like the movies promote things going, onto cable or going onto satellite. And so you're going to have a balance of both.
The international sports scene, I guess that there's a question about the U.S. and how sort of isolated it is. We've seen an increasing sort of internationalization with respect to soccer or football, with respect to basketball, or with respect to even baseball. How much do you see that continuing, even with some of the direct streaming, et cetera, some of the new agreements that are coming out?
Well, direct streaming is actually going to increase that because now you can access any sports from anywhere at any time. And if you think about, the NBA audience, the global sports like football and basketball, huge international market. Things are blending together. I think 30% of the players in the NBA are from foreign markets, and people want to see those players. So we're only the tip of the iceberg, and that's going to grow dramatically over the next 20 years.
Could we see more sports teams do what the Yankees did, say with the Yes Network?
That will help defend, creating kind of regional ESPNs. So that's a compelling reason. If, for example, you're in New York and you want to see all the New York teams, that's probably a defensible moat that you can have a cable business. But not having that and people being able to go direct is a real problem.
So how hard is that if you're not, say, the Yankees or the Boston Celtics, if you're the smaller team trying to break in?
Yeah, it's a little more difficult, but on the other side of it, the smaller teams have really profited by the fact you have so much social media and clips and accessibility. So it used to be a star, you'd have to be in New York or Boston or LA. You can be a star anywhere right now because people can talk with you directly, see or market yourself, see the small team. So the small teams are actually on the rise.
You've got a footprint in two major markets. You've got a footprint over in Europe, in European football, and here in the NBA, here in America. How different are things in the European market versus, say, the US one when it comes to sports TV distribution?
There's some similarities, but they're different in the fact that you have different countries, you have leagues coming together, and certainly in football it's very confusing. It's hard to understand in America that you're playing in kind of 3 different leagues at the same time. You've got your Italian national team players that leave your team for a while and go to that team. You have the Champions League, the Europa League, and then you have each nation has a league of its own. So you have to be a very facile fan to understand what you're playing for and these different cups and things. And in the U.S., it's much simple. The league is very simple. You're going for a championship, and that's it. There's one championship. In Europe, there's championship cups and Europa Cups and all sorts of things.
The Europeans might say that's a feature and not a bug. It's part of the beauty of European football.
I think it is. And look, the NBA has really learned from that, and we have the in-season tournament. And many people were skeptics. Adam Silver was very courageous in pushing that through. That had amazing ratings last year. The games were early in the season. It made it be like late season, so it's been a big success.
So I would extend that thought and say the Europeans might think it's a feature and not a bug. I wonder if certain people think it's a bug and not a feature, given that it might actually prevent them from being able to really unlock franchise value. One thing that I've noticed, without a doubt, football is the biggest sport on the planet. But when you get a list of the biggest franchises by value, top 10, it is dominated by American sports teams. Why are Americans and American sports teams so much better at unlocking franchise value versus their European counterparts?
Well, that's a great question, John, and I think Europe's got to start to go more towards the American model. The American model basically has a very strong central control of the league, so the league can negotiate the television deals. It's all unified. You can have a unified cost structure. It's been much more difficult. Soccer kind of grew up from the minor leagues to the major leagues. It's a very different system, and so you have a hard time unifying it because it's in different countries. So that's the advantage of being in a large footprint like the United States, where there's one approach, and you can have a strong commissioner and really smart commissioner like Adam Silver really map out how do we get the product to most people at the most effective cost to get the most eyeballs on it. In Europe, it's very fragmented right now.
What would private equity bring to the U.S. sphere? Particularly, I'm talking about football, the idea of private equity investment. There are many now that are looking at it now that the potential for a 10% ownership is available.
Well, I think it's a misnomer to call it private equity, classic private equity, because private equity really comes in, buys a company, tries to grow a company, build a strategic plan, globalize a company. A 10% investment in an NBA team is more like investing in gold, or maybe not Bitcoin because it's volatile, but it's more like gold. Its value has never gone down in the last 25 years. It's been a double-digit returner for 25 years. So specific funds will be raised and are raised. Funds like Arctos and Dial, they are raised to be put into these clubs. And if someone wants a safe investment and to participate in the NBA in their own way, they can go to these funds. But that's not really classic private equity. So the stir in the newspapers of private equity is taking over football teams, it's going to call the plays. That's not happening. It's a 10% passive stake in what is a fantastic asset. The NFL has, again, grown for 25 years, all the values, and it allows people to invest. It's non-correlated to the market. So that's how it's sold. It's really specific sports-related media funds.
How fantastic are these investments if we were to see a 28% capital gains tax?
Well, that's going to apply to everything, so it's all on a relative basis. So on a relative basis, it'll be the same. I think inevitably taxes will go up given the deficits that we have, and probably should go up. And I hope they do it in a thoughtful way so it doesn't, kill the economy.
What is a thoughtful way as a businessman?
Well, if you look at nations that have a total tax that's the same on capital gains as it is on ordinary income, you'll find that they rank much lower in terms of venture capital, business formation. The United States is number one in that, and it has contributed to the fact that, if you invest in venture capital and you go for the long term and you have capital gains, a whole industry has been created around that. Europe's behind in that, China's behind in that, and it's not perfect, but some asymmetry between those rates helps that industry grow and then helps companies grow.
Do you see some contradictions in the Democratic platform, that they seem to want to foster startup culture, and at the same time there is this constant, and I would say constant effort to think of the best way to tax unrealized gains? Is that a high contradiction from your standpoint?
Well, I think, as you guys know, John, I think I see contradictions in politics on all sides. And I think we're in a very rough period right now. We're in a very rough period where things have become polarized. Populism has taken over. And I hope we'll get back to some rationality where both sides can sit down and say, okay, what is a relevant tax policy that we can fill the deficit but not kill the economy? And let's compromise and get something in the middle. And hopefully that's where we're going.
I think we all share that hope. Steve, it's good to see you. Thanks for sharing your thoughts this morning. Thank you, sir. Steve Pagliuca of Bain Capital. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. It's Danny Berger. Hey, Danny.
Hey, John. Google lost its bid to throw out a $2.6 billion EU fine for abusing its monopoly power to crush rival shopping services. The EU's top court backed a landmark 2017 decision, which found that Google illegally gave its own product listings higher dominance in search results. In a separate ruling, the same court found against Apple in a $14.5 billion Irish tax bill. Oracle shares surged during pre-market, up 8.5%. It reported better than expected quarterly profit. AI demand is still supporting its cloud unit. CEO Safra Catz says cloud services have become Oracle's largest business. Quarterly revenue rose by 7% to $13.3 billion. Award-winning actor James Earl Jones has died. He was widely known as the iconic voice of Darth Vader from Star Wars and Mustafa from The Lion King. He also starred in Field of Dreams. He overcame racial prejudice and a stutter on his way to winning 2 Emmys, a Golden Globe, 2 Tony Awards, a Grammy, and an honorary Oscar. James Earl Jones was 93. That's your Bloomberg brief. John.
Hey, Danny, thank you. Huge loss for the industry. More from Danny in about 30 minutes' time. Up next on the program, Apple diving in to AI.
We are thrilled to introduce the first iPhones designed from the ground up for Apple Intelligence and its breakthrough capabilities.
A conversation up next, live from New York. You're watching Bloomberg TV. Live from New York City, equities totally unchanged on the S&P 500. In the bond market, yields just a touch higher, up a basis point, 371.17. Look out below for crude. We're down another 0.9%, $68 and about 12 cents. Under surveillance this morning, Apple diving into AI.
We are thrilled to introduce the first iPhones designed from the ground up for Apple Intelligence and its breakthrough capabilities. The innovation and invention these products deliver will continue to deepen the meaningful impact they have on all of our lives. I'm proud of our teams and what they've accomplished, and I can't wait for you to experience these amazing products.
Here's the latest. Apple unveiling its latest products alongside its not quite ready suite of AI tools called Apple Intelligence. The tech giant also being down a blow in the EU, losing a multi-billion-dollar court fight. Tom Forte covers Apple for Maxim Group. He has a hold rating and 203 price target on the stock. Tom joins us now for more. Tom, big step back. Talked about this a few times in the last 24 hours. How unusual was this event compared to events of yesteryear? The fact that we launched a product and promoted features that don't really exist yet.
It's incredibly unusual. So I think that's the big challenge, and that's what could slow near-term sales 3 months, 6 months, because they're saying to the consumer, buy the hardware now and wait for the best feature, wait for the software. It'll be in beta next month, and then for many consumers, you'll get it next year. So I think it's a difficult proposition for Apple.
Tom, talk to me about the upgrade cycle. If Dan Ives of Wedbush was alongside you, and we still need to make that happen, Dan would say we're about to see an upgrading super cycle to tap into a lot of people with old iPhones. Are you doubtful?
All right, so Jonathan, I did some analysis on that, and I looked at the 5G upgrade cycle and compared it to the AI upgrade cycle. I think you're going to see about half of the lift you saw from the 5G. And the reason I say half, not whole, is consumers weren't waiting for AI phones. If you look at 5G, iPhone sales were negative. There was pent-up demand. And I think you also have this challenge from a regulatory standpoint. 25% of revenue comes from Europe, and the EU rules are going to make it difficult for Apple to roll out Apple Intelligence there. 19% of sales come from China, and China regulations will make it difficult there. So I think it's an upgrade cycle, but I think it's half of what you saw with 5G.
There's a lot to unpack there, in particular the AI aspects versus the new features aspects and how they overlap and how they don't. What I thought was interesting was the Apple Watch detecting sleep apnea and AirPods as hearing aids, because guess what? They catered to the older crowd that actually probably thought, I'm just maybe speaking for myself, wow, that's interesting. Hold on a second, maybe it's relevant. I mean, does that highlight where some of the advancements are taking place and how they don't necessarily fall in the AI sphere?
I thought, to your point, Lisa, that the AirPod Pro as a hearing aid was an excellent move by Apple. The challenge for Apple is wearable devices are about 10% of revenue. So let's say that they generated incremental $1 billion in AirPod Pro sales because of this hearing aid feature. That's not really a needle mover for Apple. Half of sales come from iPhones. It's still all about the iPhone right now. But as an individual feature, I thought the hearing aid was great offer by Apple.
Meanwhile, there's this question about how much people are going to look for a personal assistant or something that is from the Apple intelligence sphere, and whether this new phone will really give them that sort of impetus. Is there a larger story here? And this goes to what Peter Tchir was talking about earlier, that we're seeing the hints of what AI can deliver, and we're unimpressed.
If we gauge AI on Alexa and Siri, we're tremendously unimpressed. If we gauge AI, though, on other things, how Amazon for years has said, if you bought the Isaacson book on Musk that's on my bookshelf up there, you might be interested in these other books, then AI has actually been quite effective for an extended period of time. But yes, when it comes to personal assistants, Alexa and Siri are not exactly great poster children for artificial intelligence assistants.
Tom, if they can't break into the EU and China with this new AI, Apple Intelligence, they're rolling it out in a half-baked way. Why are they doing it now? Why not just wait 6 months or a year?
I think they have to. And I think the other thing that was interesting yesterday, or technically this morning in Beijing or this afternoon, was Huawei introducing a trifold phone. And I think foldable phones are kind of the next big thing for Apple, but it looks like that may not happen until late next year or the year after that. But I think when it comes to artificial intelligence, this is a great product and a great selling point for Apple. It's just unfortunate that the software won't be available when the hardware is available.
You mentioned Huawei, so I want to pick up on that point. If Apple, with this new Apple Intelligence, and these AI features cannot break into China, and Huawei's already coming out with something you say Apple might have 2-3 years down the road, how hard is this market going to get for Apple to infiltrate?
The good news there is historically, this is what Apple's been able to do time and time again. Not be the first, but be the best. You saw that in smartphones. I think you'll ultimately see that in the flip iPhone or whatever you want to call it. But yes, it is concerning that on a near-term basis, in an important market for Apple, again, 19% of revenue, Huawei is building an early lead in foldables, which are gaining traction with consumers.
Apple has me stuck in their ecosystem. Apart from that, Tom, what are they the best at right now?
What is Apple the best at? Apple's the best at making something work. So I think that artificial intelligence, Apple Intelligence, it will be something that consumers will enjoy. It'll be a flavor of artificial intelligence for consumers. Apple's best at that. They're best at making something easy to use. And I think that we'll see that. We're just going to have to wait to see that.
OK. Tom, thank you, sir. Tom Forte there of Maxim Group. Tom, appreciate it. As always, still need to make that Tom Forte, Dan Ives match-up happen at some point. I think Anne-Marie nailed it. For the Chinese market right now, Huawei is innovating hardware still. Feels like Apple is done on that front, at least when it comes to the handset, when it comes to the iPhone. They're innovating software. But that innovation, you're going to have to be patient. You're going to have to wait for it. Are bigger screens, better battery life and new colours going to cut it in the Chinese market for the next couple of quarters until we see that innovation actually come to market?
You know, this is going to be the key question in addition to a whole other host of issues in China, which we're seeing in other industries as well. I will say Apple is very good at waiting and then perfecting the execution of something. So this isn't the first time that they've done that. And foldable phones, very debatable in the households last night.
How did that go?
It was a really heated debate. Some focus on the hinges, the hinge quality, what happens when the hinges break.
OK.
What also, do you really want to unfold your phone when you get a phone call or when you get a text? And there was
what we used to do.
Well, right, but do we really want to go back
and unfold it?
Or do we want to go forward?
I want to go forward to the next hour of Bloomberg Surveillance, and here's the lineup. Wei Li of BlackRock, Tom McLoughlin of UBS, Seroka, Executive Director of the Port of Los Angeles, and a whole lot more from New York City. With futures slightly negative, this is Bloomberg.
I think the market's overreacting right now.
I think the challenge is it's overreacting to single points or news.
You don't want to get defensive now. It's a wrong time.
Uncertainty is a factor here.
We're still pricing in very much a soft landing.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. Bloomberg Surveillance, second hour, starts right now with equity futures negative by 0.1% on the S&P 500. Just a little bit softer going into the big one later on this evening at 9 p.m. Eastern Time. Debate night in Philadelphia for the one and maybe only time. Harris facing off with Trump in Pennsylvania.
Last time we got a debate from the presidential candidates, it was rather consequential. So there could be a lot of potential fireworks to come out of this, given the fact there are a lot of questions around Kamala Harris. And frankly, we have not seen these two pitted against each other. And this is a very different race and a very new race, just less than 2 months ahead of the election.
And what we heard from Evan Roth-Smith, though, is that tonight's going to be critical for really just 500,000 people. That's who each one of these individuals wants to reach. Those in the swing states that have yet to make up their mind. And he says what they're yearning for, especially for Kamala Harris, given this is her first presidential debate, not Donald Trump's. He's had multiple of these. They want to know more about policy. Over the weekend, we actually did get the policy proposals from her team on the website come up. She's leading on the economy.
We finally have that tab now.
We finally have that tab. And she's leaning in hard on the economy. And given the fact that this is going to be in Pennsylvania, this is really going to be the number one focus.
It took a while to get that tab. This is one not just for this country. This is a debate for the whole world, including this country, China. China very much in focus right now, and I think we have to keep going back to the difficulties in that economy. I know we're all obsessed about what the Fed may or may not do on September 18th for good reason. It's consequential. But in China at the moment, we've got equities near a 5-year low. We've got the economy in what many are describing as a deflationary spiral. We've had import data overnight that shows imports totally subdued. And if you're a European manufacturer or a global manufacturer trying to sell into China right now, you're facing some really soft demand.
Yeah, and this is a real problem for Europe in particular, which is the reason why you're seeing a greater degree of weakness, and that Morgan Stanley call about potentially parity on the euro by the end of this year. BMW coming out this morning and talking about how it was cutting its forecast for the year. Yes, there was a faulty component, but hey, guess what? China, very muted demand, and that is one of the biggest markets for them. Look, this is going to be an ongoing question. How much is China isolated from the Western world? A lot of people say from the U.S. a lot more. From Europe, not so much. And you take a look at some of the trade tensions, and you wonder who's going to be allies with whom in a very different economic landscape going forward.
In a world of fence sitters for the last 10 years, well, you have to pick a side. Lisa pointing out the difficulties over at BMW. We were talking about a new iPhone coming to market in the last 24 hours. There's going to be a big challenge in China as well to sell that phone.
Oh, absolutely. Given the fact that what you've seen from every other consumer brand in China is they're actually lowering prices to try to get consumers out to buy all of these goods. Another interesting thing, when we talk about the election, we talk about what's going on in the Chinese market. I still go back to that Goldman note, Jonathan, you brought up a number of times. Goldman is saying that China is waiting on the sidelines potentially for fiscal hose to use in the economy to really try to drum up some of the economic, the drag on the economy because of the election. Because they don't know who they're going to get and how bad potentially the policy may be, say when it comes to 60% tariff wall on China.
When you tie this together, you kind of get Peter Scheer's point of view, which is how much are you paying attention to? I'm looking at what's not going to change to try to advise clients because, frankly, they just don't know much. But you think about that from a corporate executive standpoint. And I keep going back to a number of conversations I've had recently with executives where I ask them, what's your biggest question? Number one question, tariffs, because they don't know what's going to happen with that. Number two question, they never mention China. They say that they're expanding in China. But a big question of whether that's feasible given this dynamic. To me, this just all highlights that It is very important. The debate is not going to exactly cut it in terms of giving clarity to any of these issues, which are quite complicated and not necessarily going to be prescriptive.
We'd love some clarity, and we'll all tune in to hope that we get some anyway. If you are just tuning into this programme, welcome to this programme. Equity futures right now on the S&P 500, just about unchanged, flat and going nowhere. A welcome treat given the downdraft we saw through last week. In the bond market, yields higher by a basis point or two, the 10-year 371.92. And look out below on crude. Here we go again. The sell-off resumes. It's a break of 68, Lisa, 67.99 on WTI.
Even with Hurricane Francine barreling down in the Gulf and this question of whether that could disrupt some of the production, this, to me, is really one of the red flags people are looking at. And you can see this correlation between oil, between crude, and longer-term yields, which actually hit their lowest level in the U.S. going back to 2023. There's a feeling this is as much a demand story as a supply story at a time where you're not seeing increases in production from either Saudi Arabia, OPEC Plus, or even some of the crude producers in the United States.
71.20 on Brent crude. Coming up this hour, we'll catch up with Wei Li of BlackRock, staying long AI, Tom McLoughlin of UBS ahead of the first and only scheduled debate between Harris and Trump, and Jean Seroka of the Port of Los Angeles on a summer boom in imports. We begin with our top story. Apple's struggling to inspire confidence in its new phone with not quite ready AI features. Wei Li of BlackRock is optimistic that AI can keep driving returns, writing, "We see AI build-out and adoption creating opportunities across sectors. The AI theme has driven US stock gains and solid corporate earnings, making us overweight US stocks overall." Wei joins us now for more. Wei, it's the corporate earnings side of this that I think we should sit on just a little bit longer. Are you actually seeing this reach the bottom line? And why are you so confident it can do so in much bigger ways in quarters and years to come?
We think that there is more to go in the AI cycle, but we are lighting up on our concentrated conviction in tech and instead looking more broadly at the AI broad build-out complex and ecosystem. You look at the earnings picture, Q2 earnings, all sectors actually beat expectation. You look at the overall picture, we're talking about 13% earnings delivery versus expectation of 10% at the beginning of the quarter. And looking ahead, consensus is pointing to a lot more broad-based earnings growth picture rather than a very concentrated picture, which is what we had so far. So yes, we think that there is more to go for the AI theme, but it's not just about the initial first phase beneficiaries anymore. We're broadening out to other sectors like utilities, like materials, like energy, like healthcare, because we think that that is starting to play out on a broad-based way. So we are overweight U.S. equities as a result and less concentrated compared with how we played it up until now.
So, well, let's pick out a sector. You mentioned utilities. If you haven't been following this closely, and of course you have, utilities are up more than 20% on the S&P 500. That sector on the S&P has outperformed the Nasdaq 100, which might come as a shock to a lot of people, Wei. Just what is happening with utilities? Why have we seen such a large gain, and why do you think it can ultimately continue?
Two factors in particular. First is around the fact that the AI build out the CapEx spend by consensus estimate, which is wide ranging. We're talking about potentially the magnitude of CapEx spend comparable to the first industrial revolution, especially when we also throw in some of the other numbers around the low carbon transition. So certainly that has helped with sectors that are well positioned to benefit from the broader build out. And second, what's happening in the rates space, right? We have seen very meaningful repricing in rates. So for sectors that are sensitive to that, there has been corresponding relative performance as well. Right now, the Fed is expected to cut 250 basis points from now until the end of next year, which is really what you would expect from the central bank if we're talking about a deep recession or certainly recessionary environment, which is not what we're seeing coming through in terms of the economic data releases. So we certainly also think that in terms of rate repricing, maybe markets went a little too far and we would lean against that. But certainly that also explains the relative sector performance that you just talked about, Jonathan.
We'll go into that a little bit further, but I want to stay on big tech for a minute, just because we were talking to Peter Tchir earlier this morning, and he said he could see another 10% downside to the overall index, driven by some of these large tech names as people reassess just how quickly some of these profitability measures are going to come to the fore. You kind of had a little bit of a change in tone, recognizing that people had really shifted away from some of these names and were questioning the speed in which it would be monetized. How are you arranging? Do you expect a similar kind of downdraft? Is that kind of how you're positioning and being a little bit more cautious right now, even if long term you're still bullish?
Yeah, I think what you just talked about is exactly why we are broadening out in terms of how we implement AI. If you just look at the big tech, if you just look at the tech sector in particular, the gap between its earnings expectation, earnings growth expectation versus the rest of the market is now narrowing. And that points to we cannot indefinitely extrapolate the sort of earnings growth that have supported the sector up until now. And certainly what you talked about in terms of greater scrutiny around the return on investment of some of the hyperscalers CapEx, that certainly also weighed on sentiment. How we look at it is not just from the individual company perspective. Yes, of course, we look at AI CapEx, we look at the return expected off the back of that CapEx. But actually, in order to fairly assess what is a reasonable return, we got to look at it on a broad economy basis, because there are beneficiaries of this theme that is not concentrated within the specific tech sector, within the Magnificent Seven. We're talking about other sectors as well, different phases of AI adoption. So I think looking at it from a top-down, aggregate economic wide basis is how to properly assess the return on the enormous amount of CapEx that has happened, that is also expected to happen.
You were talking about the economy, and you mentioned how a lot of what's been going on in markets and the rotation has been tied to this, what you think is excessive pricing in how much the Fed is going to cut rates. How important is CPI to you, coming out tomorrow at a time where the emphasis clearly is much more on the labor market?
I think CPI is important to the extent that right now markets are split between if we're going to get 25 basis points of cut or if we're going to get 50 basis points of cut. And CPI is the last remaining big data point from now until the Fed meeting. So it's important in that regard. But I certainly agree with your observation that market focus and frankly, Fed's narrative, the focus of the Fed has shifted from inflation fear to growth slowdown and recession fear, right? So CPI tomorrow is important, but certainly a lot more sensitivity has been baked into labor market release compared with the CPI print. Now, what is happening in the space of inflation? Inflation has come down a lot, and so far the last quarter actually is the core service piece that has really kind of surprised also to the downside, supported by slower demand, supported by slowing wage growth because of the positive supply shock from immigration. Now, in the very, very near term, all of these factors have room to play out, which is why we are also expecting a somewhat benign reading tomorrow. Now, having said that, going beyond the kind of the immediate month upcoming, we do see inflation eventually settling at a level that is higher than pre-pandemic levels because of structural constraints coming from the low carbon transition, coming from geopolitical fragmentation, coming from ultimate labor shortage from aging population. So markets are currently reacting as though we're going to have lower and friendly inflation prints, which feel about right, but it's underappreciating the level to which we're all going to have to live with structurally higher inflation because of the factors that I just talked about, not to mention greater fiscal spend, no matter who gets in the White House later, early next year.
So Wei, just quickly, before you go, are you hesitant about getting long, the long bond with all of that in mind?
We favor the belly of the curve rather than the long end of the curve for precisely that reason. Markets are currently both underappreciating inflation premium. It's not expecting inflation to be structurally higher than before. And on top of that, markets are underappreciating the greater fiscal trajectory. Right now, debt to GDP ratio in the US at 123%. It is expected to get to 130% 50% by the end of the decade, and 200% by the end of 2040. And depending on the fiscal mix of the different candidates, that can even be more pronounced, right? So when that is the case, investors ought to demand greater compensation for holding duration in portfolio, which is why we prefer the belly of the curve rather than the long end of the curve right now.
I'm told there's a bond auction as well a little bit later this afternoon. Wei Li, thank you, of BlackRock. $58 billion of 3-year notes, then tomorrow $39 billion of 10-year notes.
And $22 billion of 30-year notes the day after. And
you forgot something.
Yeah, I mean, come on. And actually, that might be the most interesting because it's the longest. So it really will test people's appetite and sort of where the deficit falls in that.
The event of the next 48 hours. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. BMW plunging in the European trade, down nearly 7%. It cut its full-year guidance, pinning automaking operating margin between 6 and 7%. That's a downgrade from 8 to 10% previously. BMW said a faulty braking system from a supplier led to a 1.5 million vehicle recall. It also noted the ongoing slump in China as a headwind. Morgan Stanley says the euro will slide towards dollar parity within months. Strategist David Adams expects the single currency to slump by 102 by year end, roughly 7% weaker from current levels. Adams said that the market may refocus on an ECB cutting deeper and faster than what is currently priced in. His call is the most bearish call among currency strategists surveyed by us. The consensus expects the euro to strengthen and end the year at 111. A SpaceX Falcon 9 rocket launched from NASA's Kennedy Space Center in Florida earlier this morning. A crew of 4 private astronauts are on board. The mission aims to conduct the first fully commercial spacewalk. It will test spacesuit tech developed by SpaceX. The crewed capsule is intended to fly an elliptical path around Earth at a maximum distance of about 870 miles. That is the farthest distance since the Apollo program ended in 1972. And that's your brief, John.
Danny, thank you. It's pretty incredible, isn't it?
It is. I spent a lot of time focusing on this actually this morning. And
what did you learn?
The lead pilot is Jared Isaacman, who is a 41-year-old billionaire who founded his own company and dropped out of high school, who has 2 young daughters, and that he's going to have this sort of like umbilical cord attached to him with oxygen coming in as he does a spacewalk with another person. And it's just really interesting. You know what they're not doing?
What's that?
Rescuing the 2 people who are stuck in space.
They're set to do that in February, though, right?
I know, but they got to wait kind of a long time.
That's amazing. Amazing the developments we've seen in the last few years. Up next on this program, it's debate night in America.
Kamala Harris will deliver crime, chaos, destruction, and death. If she's allowed to be the president.
He plans to create a national anti-abortion coordinator.
She's lazy. She wants to have an open border.
If you got something to say,
He gets the opportunity to do just that a little bit later. Box office in Philadelphia from New York this morning. Good morning. Equities on the S&P 500 just a little softer, but basically flat to unchanged throughout the morning so far. In the bond market, yields higher by 2 basis points. The 10-year 371.92. Under surveillance this morning, it's debate night in America.
If she wins, your finances and your country will never recover.
He intends to enact what in effect is a national sales tax, call it a Trump tax.
Kamala Harris will deliver crime, chaos, destruction, and death. If she's allowed to be the president.
He plans to create a national anti-abortion coordinator.
She's lazy, and probably more importantly than being lazy, she wants to have an open border.
If you got something to say,
we are all looking ahead to tonight's debate between Donald Trump and Kamala Harris to gauge potential policy signals from both candidates. Tom McLoughlin at UBS writing, protectionism is once again on the ballot. The choice, sharply higher tariffs under Trump versus targeted selective tariffs under Harris. Uncertainty about the election outcome and hence any specific trade policy remains high. Tom joins us for more. Tom, good morning to you.
Good morning.
What are you looking for from this evening?
Well, it's going to be highly contentious. That's not going to surprise anybody. What's interesting, I think, is there was some studies done about a decade ago about how people look at different debates. In primary debates, you had as many as 60% of the people who were listening to debates actually making a decision as to the candidates. But in the presidential debates, when the final two candidates are set up, the most is 10%. You don't really see much movement. And in this year, with this kind of polarized electorate, I'd be surprised if more than 5% actually are looking at this and saying, I'm going to make a choice. They're going to reconfirm a lot of their existing views.
Is it a little different given how different this election is? It was supposed to be Biden. It's now Kamala Harris. And voters are still trying to understand who she is and what she stands for.
That's right. I mean, she's been in the national spotlight to some degree for 15 years. But as a vice president, it's probably the worst job in America, right? You don't have the ability to basically make policy. So she's trying to set forth new policies under her own name and basically separate herself to some degree from what the Biden administration was doing.
But regardless if it's Harris or Trump in the White House next year, you're seeing a more protectionist economy, a more protectionist U.S.
Yeah, one of the things that changed in 2016 was that Donald Trump changed the policy platform of the Republican Party, which had existed for 50 years, which was free trade. And when that happened, it basically it's one of the few things that actually have a bipartisan consensus, adversarial posture towards China and also some degree of protectionism. And that's true in both parties at this point. It's one thing that they can agree on.
One thing that you just said was that probably in this election, there's about 5% of people left.
At most.
At most, who might actually change their opinion based on this debate.
Yes.
So what's the point? Is this just entertainment? Are we expecting to learn anything?
Well, remember, we did actually have presidential debates. We had one, I think, in 1860. Then we had one in 1960, and we didn't have one again until 1976. So this is not that long a time period we've had these debates. They have been somewhat consequential. In 1960, of course, between Nixon and Kennedy, it changed the format so that the printed word was no longer the defining characteristic, it was the imagery, right? So if you listen to the 1960 debate on the radio, Nixon won. If you watched it on TV, Kennedy won. Mm-hmm. So to some degree, this is an opportunity for Harris as well as Trump to go ahead and basically represent themselves in an image basis. Now, I think in both cases, like I said, this is going to be pretty contentious.
I was thinking about just how many consults will it take to actually come up with the correct wardrobe and presentation.
There's a lot of that.
I know, I'm
goodness,
sure.
Yeah,
this is exactly why people are doing this. I'm just wondering, last time we had a debate, it was rather consequential, I believe.
Among the most
Yes, so could we see something similar after this debate?
Well, we live in an era right now where sound bites matter, right? Because people's attention span is very short. And so both candidates are going to go ahead and think about what soundbite they want to make sure they get in there during the debate, because it's going to be repeated for the next 6 weeks ad nauseum in 7 states. So you want that one or two sentence that you've basically been training for the last 4 days. That's probably, in terms of, I know you're holding your head in your hands, but
the state of America,
you know it's going to happen, right? So anyway.
Kamala Harris's policies have been described at best as strategically ambiguous. The presidential campaign coming from Donald Trump at the moment seems to be somewhat confusing, to put it kindly. We understand that he would like corporate taxes to come down to 15%, but with conditions. Or 20. Or something else. Then we hear on tariffs that if you are pulling away from the US dollar, we're going to slap you around with a 100% tariff. It's very difficult for us to understand where this is actually heading. What are you telling clients about those two issues?
Well, in the case of a second Trump administration, you can absolutely expect tariffs to be first on the agenda. I think to some degree, think about it this way. The Trump administration looks at it as kind of like a transactional isolationism. In other words, I want to basically negotiate with you one-on-one. The whole multilateral engagement that represents the United Nations, NATO, that's not part of his shtick. So we're going to go ahead and basically one-on-one negotiate this, and I'm going to use tariffs as the leverage and the threat in order to basically extract whatever concessions I can get.
In 30 seconds, NAFTA was the first target last time around for Trump Volume 1. What's the first target this time around?
It's still going to be China, I think.
Still China?
Primarily. Again, part of that is because there's a bipartisan consensus among politicians in Washington, also in the electorate, that an adversarial posture works. So China will be one. And then, of course, you'll have selective arguments with European allies.
Tom, I appreciate it. Thank you, sir.
My
Tom
pleasure.
McLoughlin of UBS teeing up the debate later on this evening at 9 p.m. Eastern Time. Did you get your answers?
I mean, it makes sense why there's so much focus, I guess, on exactly what they wear, the hand motions. Remember the this?
Sound bites.
Remember the
yeah,
this?
Don't point.
Don't point.
Don't point.
But then everyone was going like this, and everyone was like, who goes like this in real life?
I'm
Are you
not sure
kidding
Donald
me?
Trump really cares about this bit.
I know, but it's like, are you pressing a button?
Do you not do that?
This?
You do that?
No.
No? One of those?
I'm totally.
So aggressive, Bramo.
I'm completely aggressive, Bramo.
So aggressive. Coming up on this programme, Bloomberg's Stephanie Baker joins us to discuss her new book, Punishing Putin, Inside the Global Economic War to Bring Down Russia. Fantastic read. That conversation just around the corner from New York. This is Bloomberg. Live from New York City, welcome to the programme. Things are a little bit calmer going into the CPI print tomorrow morning. That's about 25 hours away. CPI tomorrow, PPI after that. The scores at the moment just about unchanged on the S&P 500. Down on the Nasdaq by 0.1%. The small caps, the Russell, a little bit softer also, down 0.1% after gains yesterday snapped a 4-day slide on the S&P 500. If we switch up the board, we'll turn to the bond market, the 2-year and 10-year and a 30-year. In the bond market looked like this. Yields higher by 2 basis points, 368.93 on a 2-year, on a 10-year, 372. So still, that little bit of steepness in the curve. Just normalising very, very slowly. And Lisa, closing at that level once again. This is not what we've seen over the last 2 years or so.
You almost forgot about the 30-year, but there's
Almost.
an option this year.
But I didn't forget because I could see you out the corner of my eye.
I actually think it matters because that's sort of the longer-term understanding of what the extra premium is for inflation as well as for potentially the deficit. I mean, we keep talking about this, about these auctions, and they aren't very interesting every week, but then at some point, you have to imagine there will be pushback.
At some point, there will be. At some point. They do this. At some point.
Please stop.
Let me tell you.
Okay.
Let me tell you. I'll
Do
go
you
through the
ever do
numbers.
this?
Let me go through the numbers. $58 billion of 3-year notes coming a little bit later this afternoon. Then tomorrow, 10-year supply. Then the day after that, we'll get a 30-year auction. So that's the bond market. Let's turn to what's developing in the commodity market. The slide resumes. Last week was ugly. 5-day losing streak. Crude on the week. WTI down almost 8%. We're down again this morning by 1 full percentage point and change. WTI 67.86, Anne-Marie, Brent crude down to the low 70s, just getting pulled lower once more.
I'd love to see where these numbers were, where oil would be trading if OPEC came out and said, actually, we're going to let things stand as will, and we're going to put some barrels back on the market. It is obvious they're going to have to cut in 2 months if they want to remain some level of floor under these prices, because we're past the peak driving season. So what is left when it comes to demand? And when you talk to traders, they're seeing an oversupply of 2025 and 2026.
How much of this is coming out of the difficulties that we see play out almost every single morning right now in the world's second largest economy?
Well, when it comes to what's going on in China, this is a huge demand story. And actually, Russell Hardy of Vito was talking about the fact that he sees gasoline uptake in China actually also over the course of the next few years starting to come under pressure because why? They're selling really cheap EVs in China. So that's another big, that's something you should also look at, not just oil when it comes to oil used across the commodity space in China, but gasoline specifically because those uptakes in EVs.
Sell off across the board here. Brent crude in the low 70s, WTI in the high 60s. Under surveillance this morning, some top stories for you. Donald Trump and Kamala Harris set to take the debate stage at 9 p.m. Eastern time in the critical swing state of Pennsylvania. The candidates agreeing to a series of rules, including having no live audience and microphones being muted when it's the other person's turn to speak. The face-off at 9 p.m. in Philadelphia.
You know, we were talking to Tom McLoughlin. What's the purpose of this? If fewer than 5% of everybody watching is actually going to change their mind. And we actually had the most consequential debate, arguably ever, earlier this summer when we had a face-off that led to one of the candidates leaving his post as running for office. So there's a question here about what the stakes are, especially because people don't really know who Kamala Harris is. I mean, I think that's really the key point here. As much as we think we're going to learn some policy, which we've really gone over extensively, is really going to be about that.
Anne-Marie knows about the polls. AMH, you know about the polls better than I do. Things are so tight. Surely 5% actually matters a great deal.
It does matter a great deal. And not only are the polls over the weekend with the New York Times Siena poll showing Trump just barely pulling ahead, but if you go back and you look at where we are today in Real Clear Politics, Harris is up 1.2 points. This day in 2020, Biden was up more than 7 points. He won that race. In 2016, today in 2016, Clinton was up 2.7 points. That's why when I talk to people, basically the polls are frozen. This is 50-50. The debate matters because potentially it can shift. And if it changes in the predict markets, this is going to be interesting for investors.
And only the second time, really, we've seen Kamala Harris, the vice president, face a series of questions. We've had one sit-down interview. This, I would guess, would be the second one in many ways, and an opportunity for Donald Trump to ask the questions that maybe he wants to ask.
There have been questions about what she's like when she's not scripted, and this is sort of that key question. Of course, the question around Mike's sort of interesting. Questions around social issues going to be really interesting. Interesting to see how some of the accusations around immigration are going to be countered by Kamala Harris. Look, it's probably going to be the most watched debate ever, and I'm actually looking forward to seeing the numbers.
It's going to be up there. That's for sure. Let's leave the politics to one side and turn to the latest from Goldman Sachs. It is conference season, and the caution coming out of Goldman is that the trading unit is on track to drop 10% from a year prior. CEO David Solomon pointing to a more challenging fixed income environment compared to last year. The bank also disclosing a $400 million pre-tax hit after retreating from its consumer credit business. Goldman weren't the only bank we heard from. We heard from Citi yesterday as well. And we picked up on these comments from the CFO a little bit early this morning in the first hour of this programme. I think they're worth repeating. The nature of spend is evolving for consumers. It's going from discretionary to a more staple type of spend. And I just wonder how much commentary we get from the banks when earnings season commences in the next few weeks.
We heard something similar, the sort of choiceful word that we've talked about quite a bit among a lot of the retail executives. But it's interesting to hear it coming from one of the major credit card lenders, especially at a time where the credit card outstandings are increasing at the fastest pace going back to 2022. It is so difficult to know, and this really goes to the heart of the anxiety among so many investors right now. Is this just a moment in time where people are suddenly going back to their roots and kind of figuring out after the hangovers of all of their vacations, okay, what do we actually need to buy? Or is this something that is a more sustained downturn? And that, I think, is really the question a lot of people don't have answered.
If you want to put a circle on the calendar, October 11th for JP Morgan results, so about a month away. Elsewhere, Apple unveiling the next generation of iPhones, AirPods, and the Apple Watch in a splashy event from its California headquarters in Cupertino. CEO Tim Cook touting the iPhone 16's AI-infused technology, though saying those capabilities will be gradually added to devices through software updates. The new iPhone's set to go on sale this Friday, so get the hardware and we'll send you the software and everything else a little bit later.
Yeah, and I wonder how much this will actually be an uptake. Bottom line is, this sort of goes to the angst of how quickly consumer goods can really adapt to AI. And it goes to Wei Li actually shifting away from some of the big tech names. And we heard from Peter Tchir saying, people want to show me the money a little bit more with AI.
Big launch for Apple just yesterday. Big launch for us here at Bloomberg today. A new book by Bloomberg's Stephanie Baker, Punishing Putin Inside the Global Economic War to Bring Down Russia. I'm pleased to say that here in New York City, around the table with us, Stephanie Baker. Stephanie, good morning to you.
Morning.
Let's just start with how quickly this came together and how much work goes into a book and how much you did in about 18 months. Can you walk us through that?
Yeah, I wanted to get it out before the election, but it's in a way a product of a lifetime of work. I lived in Russia in the 90s. I went back periodically to interview Russian billionaires over the years. But, you know, I wrote the book last year in about 6 months.
That is absolutely phenomenal.
Yeah.
Talk to us about what prompted it and how different things are post this war, during this war, compared to, say, the initial invasion into Crimea back in 2014.
Yeah, I really saw this as an end of an era. This unprecedented wave of sanctions against Russia, much different, much harder than the sanctions that were imposed after the annexation of Crimea in 2014. You had this, it was really the end of 30 years of integration of the Russian economy with the West. And there were just all these dramatic stories to tell. Hundreds of billions of dollars have been frozen. Major global corporations had to decide, do they stay in Russia? Do they leave, like McDonald's? Deliberations in Washington about how to limit Putin's revenues to undercut his ability to fund the war. So I try to tell the backstory behind all these dramatic decisions, flipping from policymakers in Washington, London, and Brussels to oligarchs with their assets frozen. It upended everything from European football to the global oil market. So, it's quite sweeping.
This had a lot to do with both private and public sector going after Russia. You mentioned McDonald's, Starbucks, Danone, each had very different ways of how they were going to slowly pull out. And then you had this unprecedented sanctions from the West. What do you think hurt the Kremlin the most? Was it the companies that all pulled out and changed course? Or was this level of sanctions, the freezing of assets, that hurt?
I think it was the freezing of Russia's central bank reserves that decision they took within days of the invasion, which was, historic. Really, it had never been done before. They'd done it with Iran and Venezuela, but the amounts of money were relatively small. With Russia, it was $300 billion that was parked in Western financial institutions, mostly in Europe. That was something that Putin was not expecting. And now you have this big fight over, well, instead of just freezing the assets, can we actually seize them and use them for Ukraine? And that debate and that sort of back and forth is happening as we speak right now. They're talking about trying to use those assets to back up a $50 billion loan for Ukraine.
Right. And on the leadership level, they took that agreement at the G7, but it still feels like they're trying to work out actually how to do that. Does it change if we get Donald Trump in the presidency in January?
Right. Well, that's the million-dollar question. He has said, we have to go off what he said. He said that he will end the war in a day. He'll end it before he even enters the White House. He hasn't spelled out how he's going to do that. But if he's going to try to broker a ceasefire, it's hard to see how he could persuade Putin to stop fighting without some kind of sanctions relief. Putin is desperate for some kind of sanctions relief because there are a lot of loopholes in the sanctions, but they're still costing Russia hundreds of billions of dollars.
What was the most surprising detail from the book that you've uncovered?
Oh, that's a hard question.
It's like picking your favorite child. So pick your favorite child.
I think it was remarkable how the West came together in a coordinated fashion. You'd never seen that. Just, Europe, the UK, the US, and Japan acting in concert across a number of different decisions. And I think that was the most surprising thing in the sense that you'd never had that level of coordination before.
Did it feel fragile, or was it something that was sustainable regardless of what political cycle we're in?
I think there were always debates and fights and disagreements over things, and you're seeing that still playing out with this fight over Russia's central bank reserves, because so much of the reserves are parked in Europe. Europe is still divided. Europe is the one that's opposed to actually seizing the principal and using it for Ukraine. The U.S., Jake Sullivan and the Biden administration has finally come out in support of that. But there are still debates and divisions over, how to move forward.
Stephanie, you described this at the start of this conversation as an end of an era. And we reflected on what it felt like in 2014. Initially, after that invasion, I think there was always this feeling from corporate America and for European corporations as well. They might have to step back, but ultimately things will normalize again and they can go back in. Do you get the sense that people still believe there are certain companies, a certain section of corporate America believe that opportunity, that opening is just around the corner down the road, that they've moved on?
Yeah, that was the biggest mistake of Western corporations operating in Russia. They all thought it might blow over. And they'd spent decades building up, physical assets in Russia that they did not want to give up. I think a lot of them have finally realized this is not going to change. And you've seen, just recently, a major corporation, Unilever, finally deciding after 2.5 years that it was time to sell and get out. The problem is those that waited are paying a heavy price for getting out. They have to agree to a heavy discount. They have to pay 10% to the Russian budget. So it's the ones that got out early within the first couple of months, like McDonald's and a few others, that ended up looking smart.
Can I ask this question? And it's a difficult one to answer, so forgive me for asking it. Your experience with Russia, the lessons that we've learned, particularly for corporate America, hoping things would blow over and ultimately understanding that we're going to have to lose money. Is there anywhere else in the world we're making the same mistake at the moment?
Well, one of the reasons why I wanted to write this book is because I saw this as a grand experiment in economic warfare. We'd never impose sanctions on a country as big as Russia or as integrated in the global financial system, a major oil exporter. And, we're seeing that still playing out in the lessons learned. And obviously, the big lesson to be learned is how do you do this for China if China indeed invades Taiwan or imposes a blockade. And China, with roughly 1/3 of global manufacturing capacity, that poses huge challenges. And I think it would be very difficult to impose the kind of economic isolation on China that we've tried with Russia.
Let's hope that's a book you don't have to write.
Yes.
Appreciate your time this morning. Good luck with everything. Stephanie Baker there, the brilliant Stephanie Baker of Bloomberg, Punishing Putin, the title of this book, Inside the Global Economic War to Bring Down Russia. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Bank of Japan officials see little need to raise rates at their decision next week. According to people familiar, officials are still monitoring market volatility and the impact of the July hike. That hike was followed by gloomy U.S. jobs data, all resulting in sudden yen appreciation and the biggest plunge in Japanese equities in decades. Most economists expect the BOJ to wait until December or January before hiking rates again. Sources say the biggest U.S. banks will see a 9% increase in capital requirements. That is a dramatic retreat from the 19% regulators had previously planned. When the proposal was first introduced last year, banks had unleashed one of their fiercest lobbying campaigns. As Tropical Storm Francine grows, oil drillers in the Gulf of Mexico have halted production and started to evacuate crews. The storm is set to become a hurricane today as it churns towards Louisiana. Francine's forecasted path shows it crossing over oil fields, accounting for roughly 125,000 barrels of crude and 300 million cubic feet of nat gas a day. The storm is expected to eventually produce winds at 100 miles per hour. That would make it a Category 2 hurricane. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on this programme, the threat of tariffs helping to spark an import boom.
I want to cut taxes on Americans while putting tariffs on China and foreign countries.
He intends to enact what, in effect, is a national sales tax.
We'll catch up with the ports on the West Coast in just a moment. From New York City this morning, you're watching Bloomberg TV. Day two of the trading week. Equity futures totally unchanged, going nowhere on the S&P 500. In the bond market, yields a touch higher, up a single basis point on the 10-year, 371.54. Under surveillance this morning, the threat of tariffs helping to spark an import boom.
I want to cut taxes on Americans while putting tariffs on China and foreign countries to bring our jobs back home.
All the while, he intends to enact what, in effect, is a national sales tax that would raise prices on middle-class families by almost $4,000 a year.
So here's the latest. The Port of LA and Long Beach closing out a record-breaking summer of import volumes. Retailers and other importers stocking up as the threat of new tariffs linger, and a possible strike by a large group of American dock workers adds to the usual frenzy of pre-holiday ordering. Gene Seroka, the Port of Los Angeles Executive Director, joins us now for more. Gene, welcome to the program, my friend. It's good to catch up with you once again. Let's just talk about how summer went. I know it was a record-breaking July in many ways. What did August look like?
Good morning, John. Good to see you. August is going to come in even better than July, where we had about 939,000 containers. We'll be over 950 in the month of August, including record import numbers. So the caravan of cargo continues for the reasons you mentioned. Underlying economic indicators for us continue to be strong. And then three big geopolitical issues. The extended discussions around collective bargaining on the East and Gulf Coast for ports, the drought conditions in the Panama Canal, which seem to be in better shape, and the ongoing security concerns in the Red Sea all have more cargo pointed our way.
So, Gene, I know this is difficult to do, but when you try and disentangle that, how do you get a read on the actual underlying economy when there are so many issues forcing and pushing, ultimately fueling this volume?
One, the American consumer continues to spend. And where most retailers in the United States put their orders in 90 to 120 days before vessels even sail from Asia, the cargo coming in now continues to replenish inventories even beyond the traditional holiday season. So that, combined with manufacturing parts and components, which are steady, not great numbers, but continue to be steady, that makes up about a quarter of all our volume.
Have you seen a change in the mix, though, of items that you are getting in, Gene? And we were talking earlier, John mentioning the Citigroup executive at this recent conference talking about a shift to more staples away from discretionary spend. Are you seeing that in what's coming through the port?
Lisa, not necessarily right now. A lot on the holiday goods, so toys, footwear, clothing. Much of this information we'll get in a historical sense, about 4 weeks down line, but haven't really seen a big change in mix or customer base. We still have about 125,000 different importing companies that utilize the Port of Los Angeles on a regular basis, and no one organization has more than a 5% share of that cargo volume.
And we've seen some volume actually shifted toward LA as a result of strikes on the East Coast. Now you're threatened with strikes in your own region. I'm just wondering how you sort of understand what's the driving force behind this. Do you think that this is sort of something that businesses across the country are still feeling in terms of pressure to keep employees, or do you think that there's some other dynamic here at play?
Well, Lisa, as you and I have talked about before, this is complex, it's nuanced. Number one, the American consumer is buying, so that cargo keeps flowing. But again, what folks are telling me directly, and this is going back almost a year and a half, that there are a lot more things to consider in the supply chain when making decisions as to what gateway to use. And the concerns about a protracted labor negotiation, one, have some people a little bit concerned. They started fractionally moving cargo in their allocations our way just as a hedge. Same could be said with Panama Canal, Red Sea security issues impacting the cargo that was going through the Suez Canal. So if you take 2, 3, 5% of your allocation and shift it away just as a precautionary measure, if any of those or all issues start to go in a different direction, you're at least in the game on those routings and you can increase the allocations. Overall, are folks trying to keep jobs? Yeah, and for us, it's important too, because every 4 containers that move across our docks creates a job across a variety of sectors. Super important to the folks in Los Angeles.
Gene, what about the potential for more tariffs?
Anne-Marie, you have to try to figure right now, is this campaign talk or will it be real policy? And the folks that I talk to, I'm here in Washington this week, say this could be real policy. To me, that would change the landscape at a port like ours in Los Angeles forever. 10% tariff on all of the $3 trillion worth of imports, 60% on cargo originating in China, and potentially very high tariffs on cargo emanating from Mexico. That looks a lot different when you start talking about that speed has always been our advantage from North Asia. China's share of our business has dropped from 57% at the close of year 2022 to 43% right now. Yet, we've been nimble enough to hustle for that cargo and are seeing real growth out of Southeast Asia. But that's with the advent of more nonstop services and introduction of new ones. We've got to continue to watch this issue because it will have an impact on traditional trade flows. As was just said in the opening, those tariffs mean real price hikes at the end of the day for the American consumer as companies pass those on.
But
that's
Gene,
a concern for
what
all
I'm trying to understand from you is it having an impact today? You know, you see cautious importers wanting to get to the holiday season. Do you see cautious importers wanting to get ahead of potential policy changes?
Yeah, that's happening right now, too. Again, with the most recent tariff introductions on electric vehicles, batteries, and associated parts, we only imported about 2,000 China-manufactured EVs last year. So some are trying to read into policy that'll happen after January. Some are trying to hedge by building inventories a little bit. But I don't think anyone right now has their thumb on exactly what will happen.
Gene, it's always personal and specific to an industry. There's always a bias. What would you like to see from a new administration? What's your number one thing?
Well, the protection of American jobs and American workers are sacrosanct to all of us. But as we said, we're bringing in a tremendous amount of cargo that goes to the retail community we as consumers buy, and our play in the manufacturing sector for parts and components is equally as important. A measured approach, or as has been said, small yard, tall fence, to protect those American interests are key while having rules-based trade.
Gene, appreciate it, sir. As always, my friend. Gene Seroka there, the Port of Los Angeles Executive Director, on a record-breaking summer. And when you go through the list for the import volumes, the reasons why, the threat of tariffs, pull forward, get ahead of it, a drought in the Panama Canal, the threat of strikes at certain ports around the country. There's like issue after issue after issue prompting this search.
Although what he said was it's essentially just that consumers keep spending. So ultimately, how much is it that, right? I mean, I guess that's one key question. How much is this an economic driver or an economic consequence of just how much money consumers are spending, maybe borrowed, but whatever? And how much is this something more that people are sort of adjusting to these other geopolitical risks?
The biggest difference compared to where we were back in spring of 2021? We're not hearing any issues, no complaints about handling that volume at all in that conversation.
They seem to have worked through some of those kinks at the same time. We're creating man-made kinks. But this issue of have we really remedied some of the supply chain issues that came to the fore during the pandemic?
Live from New York City this morning. Good morning to you all. If you are just tuning in, equities positive by 0.1%. Coming up on this programme, we'll catch up with David Lebovitz of JP Morgan Asset Management, Bloomberg's Mark Gurman, Lara Rhame of FS Investments, and Jitania Kandhari of Morgan Stanley. From New York, the third hour of Bloomberg Surveillance. Up next.
I see the economy slowing, not stalling.
It looks to me as though the economy is going to be particularly strong this month.
We are landing in a different set of labor market conditions that is different from where we left.
If the economy is really slowing, we should see the inflation numbers continue to move lower, and we haven't.
The important story is that I think the economy is evolving in a way that the Fed may not be anticipating.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
There is a big 24 hours coming up, so let's get straight to it. The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 just turning positive in the last couple of minutes, up by 0.1% on the S&P 500. Similar move on the Nasdaq, likewise on the Russell. The next 24 hours, the next few days, looks a little something like this. So this evening at 9 p.m. Eastern Time in Philadelphia, Harris and Trump facing off in the first and maybe only presidential debate between the two individuals. Then tomorrow morning at 8:30 Eastern Time, it's the big one of the week. It's CPI data, along with jobless claims on Thursday. Put those two things together, there's not much else left for the Federal Reserve to decide, based on the data so far, whether they go 25 or 50.
Which is the reason why when Chris Waller is saying, I could be shifted to move at 50 basis points, is that really about next week, or are we talking about some other time, just based on the fact that there just isn't the data? That said, and I don't think this has been talked about enough, if we do get a real downside surprise in CPI, does that give the Fed the ability to cut by 50 basis points without spooking the market by just saying, look, inflation's coming down quite a bit?
And then after that decision, we focus on one thing, an election in early November. So this is the big face-off we've been waiting for. 9 p.m. Eastern Time in Philadelphia, Donald Trump versus Kamala Harris. And we would like to know about policy. How conditional is that corporate tax cut from Donald Trump? And for Kamala Harris, we'd just like some more detail on what she's going to actually govern like compared to how she's campaigning right now.
Absolutely, because she was not supposed to be the nominee. She was not supposed to be the top of the ticket, which is why this debate is interesting, because we had a seismic shift of the past debates. When you asked, do debates matter? Well, the fact that that debate meant that Biden was kicked off the Democratic ticket, that did matter. But Jonathan, unfortunately, it's going to be a lot more style than substance. But for Kamala Harris, that's important. What did Evan Roth Smith say? They have to get to these 500,000 people. It's not about new ideas. It's about continuing the rhetoric for the ideas that people like or that poll well, that they pick up on and attach that candidate to that idea.
I can sense the struggle on the South side right now from economists and strategists alike, trying to come up with some numbers based on what we've been told so far. Laurie Calvasina of RBC had a stab at it in the last couple of days. Laurie, I feel your pain. Laurie basically saying that if the corporate tax rate comes down from 21 to 15, then maybe earnings climb by something like 7% on the S&P in their model, earnings per share. For Kamala Harris, if you go from 21 to 28, maybe it's the complete opposite. Maybe earnings decline by the same amount in that region. The difficulty we now have, though, is that that corporate tax cut that we thought we were going to get under Donald Trump now sounds very conditional based on where your manufacturing base is and where your workers are and where they're from.
Basically, you put this together and you can't really come up with a market assumption from what this means. And that's what you hear in the frustration that we get from analyst after analyst saying, I don't know, just wait, look at what you have, not necessarily what you're being promised down the road, maybe with 15 asterisks. That's what we heard from Peter Tchir.
I think that's the reason why there's a real question of what election risk even looks like. What is a Harris trade? What is a Trump trade? We've kind of gotten away from that because we don't have a sense. And so markets are kind of ignoring it.
Well, I was looking at the Lori Calvasino note, and she was at the economic speech where Trump spoke. And then he put a condition on this tax cut for corporate America, 15%. If you're producing all these goods in the United States. So what is it going to be for others that potentially are not? It's these kind of moments where you think you know what the candidate stands for, and then you're like, actually, it's changing. And there's something that also is attached to it that we weren't configuring for. And of course, when it comes to Jonathan, tax policy, it doesn't really matter who's in the White House. It matters who controls Congress.
So let's build on that. I always think of what a money manager, Mark Dow, said years and years and years ago when he said the biggest challenge under the Trump administration was to divorce your political bias away from your market views. And I think the same is true today. So let's try and explore that. Just divorce the politics and just focus on what's good for markets and what's bad for markets. Most people assume that tariffs are bad for markets, and most people also assume that tax cuts are good for markets. So let's run with that. If Donald Trump wins and doesn't get a Republican Congress alongside him, he can only do the bad stuff. He can't do the good stuff. Now, work that through the logical way with, say, Kamala Harris. If she wins and she does get a blue sweep, then she can do the bad stuff. And I just wonder, blue sweep, is that bad for markets? And ultimately, if we don't get a Republican sweep, is that bad for markets?
So you put this together, and it's the reason why people are just staying away completely. But basically, you're getting to this point of what is a Harris trade with the House, and what is a Trump trade without Congress, and how do you sort of bake those through? I'd be curious. Please come on with your models. We'd love to see what they are, to understand what they are, and we can compare and contrast.
Is it about models, though, or feelings? When you work through all those issues, don't you just stand and ask questions later? The closer we get to that election, isn't that going to be the big headwind here?
You know, honestly, my head is spinning because honestly, I'm listening to all of the different proposals, and there's so many different ifs and ands and buts, and what does she actually mean, and what does he actually mean, and what does Congress mean, and who are the advisors? And so you start to put this together, and it's about feelings and vibes, and that less than 5% of the people who are going to potentially.
We've got a guest around the table bracing for the first question now, and knowing what it's going to sound like. Coming up this hour, here's the lineup for you. David Lebovitz of JP Morgan ahead of tomorrow's CPI print. Bloomberg's Mark Gurman on Apple's AI-ready iPhone. And Lara Rhame of FS Investments on the 25 versus 50 basis point rate cut debate. We begin with our top story. Investors waiting for tomorrow's CPI report, looking for more clues about the size of next week's Fed decision. David Lebovitz of JP Morgan writing, we still expect the Fed will kick off with a 25 basis point cut. But if they were to adopt an expeditious pace of easing, it may do more harm than good by fueling recession fears. Overall, the data flow leaves us comfortable with our preference for risk assets, specifically equities and credit, within the context of a multi-asset portfolio. David joins us for more. David, good morning to you.
Good morning.
Let's park all that and talk politics. What are you looking for from tonight?
So I think you guys hit the nail on the head. I mean, it's less about who ends up in the White House and more about the broader composition of the government. And to your point, right, if you have divided government under a Trump scenario, then tariffs are more so in play than tax cuts. And the inverse is effectively true if we end up with Vice President Harris. I frankly think the overarching issue for investors right now is really what's going on with the labor market and how concerned is the Fed about the softening that we've seen over the past few
Fantastic pivot.
months.
So let's talk about the labor market. How concerned are you?
So when we look at what's happening here, a lot of the more bearish commentary on the street has really focused on the idea that labor income is going to deteriorate. That's going to undermine the consumer. That's going to lead to a slowdown in consumption. And that's going to precipitate a downturn in the economy. I mean, frankly, we're just not seeing the labor income story roll over. Yes, the unemployment rate has risen to 4.2%, but, wage growth is 3.8%. The layoff rate is very low. Hours worked actually increased very slightly in the most recent report. And so we think that the consumer remains well supported. So the question then becomes, well, how could you end up with a fly in the ointment here? And it really comes back to corporate profits. So yes, corporate tax rates will matter when it comes to profitability in 2025 and beyond. But I think the bigger question is, what does organic profit growth look like on a go-forward basis? And more importantly, is that profit growth going to broaden out beyond the magnificent 4, 5, 6, wherever we are today?
I'll go with you with your pivot, but I just want to ask you, is this because you're not focusing at all on the politics, or just that you can't say anything without getting slammed by one side or another?
So I think, look, the politics, I always try to divorce politics from policy. And I think when it comes to the outlook for policy, it's just very muddled. at the current juncture. I mean, we're really looking at this evening the first instance of a head-to-head between the two candidates where they can kind of pick apart what the other person is saying. I think we're going to have a lot more information 24 hours from now. I also think the debate is going to force the candidates to refocus what is really important to their campaign and maybe crystallize those ideas a little bit more in the public scene.
That actually, though, does relate to corporate profitability, because when you do talk to executives, they have just the same uncertainty, and there's sort of a paralysis in terms of investing longer term. How much do you see this actually having an impact economically at a time where there's kind of a bifurcated outcome when it comes to a couple key specific issues?
So I think that there's an interesting tension in the current environment, because on the one hand, you could do all sorts of things with taxes and corporate taxes that make investment spending more attractive, and maybe we get that uptick in manufacturing and production that everybody's been looking for the better part of the past 18 months. On the other hand, if that doesn't happen, you have lower interest rates, which the Fed is going to deliver. The question is how much. And so, that lack of clarity on the outlook for taxes, coupled with more attractive financing costs, I think that just makes the situation for the C-suite even more challenging in the current environment until they have that clarity. Unfortunately, I think we're going to have to wait until November to get clarity on the policy side. We're going to have to wait until next Wednesday to get clarity on how much the Fed is going to ease.
Are you a believer that gridlock is the winner for Wall Street?
I think at the end of the day, gridlock means no surprises. I think that there have been instances over time where having one party having full control of the government has been additive because they've been able to do things that actually boost the productive capacity of the economy. But when I look at the very partisan nature of the U.S. political situation today, I frankly think divided government prevents anything foolish from getting done unnecessarily.
How do you, though, put into context the idea that Trump might be good for the corporate tax rate, but at the same time, unilaterally could be bad for inflation if he puts up seriously high walls of tariffs?
So the interesting thing about tariffs, and as an economist, right, we don't like tariffs. We went through this a number of years ago. Tariffs are a level shift, a one-time increase in the price. And so when I think about the upside risk to inflation under either a Trump presidency or a Harris presidency, it really stems from the fact that both of them are going to run fiscally expansionary programs, right? There is more spending that is going to come through. It could be lower taxes. It could be actual more dollars hitting the economy. But the reality is both of these candidates are running on reflationary platforms, and that's going to be something that creates upside risk to inflation at a time where we finally think that the upside risk has diminished.
David Lebovitz of JP Morgan Asset Management. David, thank you. Timely. With this data coming in from Adobe, showing that online grocery prices fell 3.7% in August from a month earlier, the largest decline since the firm began tracking the numbers a decade ago. Timely, going into this debate later on this evening.
Just to sort of reduce the emphasis maybe on inflation, I will say, parking the politics aside, trying to take a cue from David over here, I do think it's going to be interesting also with the Fed to see if you do get a downside surprise. Again, I keep going back to this with CPI. It'll matter a lot more then, I think, if it's significant enough than people previously had thought.
We've got a case study when it comes to policy in the Federal Reserve as well that's worth exploring. When we were going to get the tax cuts from the Trump administration, Volume 1, coming out of the 2016 election, they had to wait. They had to wait to actually see legislative reality, not a campaign promise, but reality, before they could really start to think about what that would mean for growth and ultimately for policy.
You have to imagine, extrapolate that forward, it's going to be similar even after November. How much policy certainty do you actually have in terms of how things get executed, and whether the Fed can really arrange their policy around that, akin to what Adam Posen is talking about heading into 2025?
You can't set policy on campaign promises, and it's very difficult to make investments with long time horizons based on what they may or may not do in the next 4 years.
Well, yeah, hence the frustration, and hence the reason why when you come up with these scenarios, it's true, and you should come up with a scenario analysis. Plenty of people have. It's just a little exhausting because they'll have to change in a heartbeat.
Futures right now positive by 0.2%. With an update on stories elsewhere, with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. U.S. small business optimism declined in August by the most in 2 years. In the NFIB survey, 37% of firms reported deteriorating earnings. That's the largest share since 2010. Among those, 31% blamed weaker sales, 17% the price of materials. As a result, small companies dialed back hiring plans. A net 13% said that they plan to create jobs in the next 3 months. Kamala Harris and Donald Trump will face off tonight for their first and potentially only debate before the election. It takes place in Pennsylvania, a key swing state. The 90-minute forum kicks off at 9 p.m. Eastern. There'll be no live studio audience, and microphones will only be turned on for candidates whose turn it is to speak. Complete coverage of the debate kicks off right here on Bloomberg starting at 8 p.m. Eastern. Aaron Rodgers and the Jets made their much-anticipated season debut on Monday Night Football against the San Francisco 49ers. The 41-year-old Rodgers threw for 167 yards and a touchdown, but did have some issues with accuracy and mobility. Brock Purdy and the 49ers pulled away by halftime and never looked back. Running back Jordan Mason stole the show with 147 yards and a touchdown. That's your brief, John.
Danny, thank you. And if you rely on DirecTV, you didn't see that. You saw a notice that said Disney wants you to miss out on Monday Night Football on ABC and ESPN. Well, DirecTV wants to work to reach a new agreement.
How many cancellations were there? Let's be honest.
Honestly. If you want to watch the football right now, you've signed up for something else, haven't you?
I mean, essentially, how many people are going to look at that and say, darn you, Disney?
Yes, I'm writing a letter.
Yeah,
to Bob.
exactly.
Up next on the programme, the morning calls. Plus, Bloomberg's Mark Gurman on Apple's latest product announcement. That's next from New York City. This is Bloomberg. The opening bound 1 hour and 13 minutes away. Equities positive by 0.2% after slapping a 4-day slide in yesterday's session. In the bond market, yields higher by a basis point or two, 371.54 on our radar all morning. This mood in crude. We're down by 1.4%, Lisa, 67.74.
How much is a read? And this you pointed out earlier. How much is a read on what's going on in the United States? How much is a read on just the end of driving season? How much is what's going on with OPEC Plus? And how much really has to do with China, given the fact that you are seeing a similar type of move in iron ore as well as copper?
We've seen it in headline after headline, company after company. Muted demand out of China, and we saw it again this morning, this time from BMW.
As they downgrade some of their expectations or forecasts for this year, how much, again, does this have to do just with the consumer that's facing deflationary spirals, a real kind of drop-off in demand in China, or versus real competitive edge? I mean, that's the reason why it's hard to get a clean read, given international brands struggling to compete against some of the domestic champions at a time where there's really a nationalistic wave in China.
It's super difficult to make the case on a program like this that we're witnessing the end of US exceptionalism, that it's threatened by policy from two individuals that are going to speak to each other later on this afternoon. When you think about what's happening abroad right now, you've got an equity market in China at lows we haven't seen for about 5 years. We've got an economy in a deflationary spiral. We've got company after company reporting muted demand in that economy. The things you hear about China are not things you hear about America right now.
So this actually goes to a question around clean a shirt in the dirty laundry bin, or whatever cliche we heard for the better part of 2 years. And then suddenly it was American exceptionalism in its own right because of the tech sort of prowess that you saw from the U.S. or SOX. But there's this question about whether we see going forward about whether the U.S. can continue with the dynamism that it has versus just simply not being as bad as the rest. And that distinction, I think, is what people are trying to parse through.
It's an important one. It's an important one, but it's a relative game in foreign exchange. And there are calls the euro-dollar can drop back towards parity. Euro-dollar right now, 110, 111. Morgan Stanley looking for a move to parity. That's some of the price action. Let's get you some morning calls. First up, Piper Sandler lowering its price target on Alphabet to 200 from 206 and keeping an overweight rating. The analyst saying long-term investors should use recent weakness to buy shares. That stock is up by 0.4%. Next up, Mizuho keeping an outperform rating on shares of Oracle and raising its price target to 185. The analyst saying the company is very well positioned to re-accelerate its growth profile. Big rally for that name. We're up by 8% in early trading. And finally, Morgan Stanley maintaining an overweight rating and a 273 price target on shares of Apple. The analyst saying yesterday's launch event was as expected, and attention now turns to iPhone pre-order data this Friday. We're down 0.75% on that. On this story, one of the most well-known reporters on the stock, Mark Gurman, Bloomberg's very own, joins us now for more. Mark, welcome back to the program, sir. Appreciate your presence as always. You've covered so many of these events over the last decade. Can you walk us through how different this was compared to the others you've seen?
Yeah, thank you so much for having me. So this one, you saw a big focus on software and services in terms of Apple Intelligence, artificial intelligence. Apple is really banking on Apple Intelligence to sell these new iPhones. Let's be honest, there's not a lot new here on an annual basis, right? Moving from the 15 Pro and 15 Pro Max to the 16 Pro and 16 Pro Max, you have that new camera control button, which is cool. You have this new A18 processor, which gives you some better speeds. You have much better battery life. You have slightly bigger displays. But there's not a ton here that's going to inspire upgrades on an annual basis. That's why Apple is all in on Apple Intelligence and really pushing that as the beginning of a new type of ecosystem and platform. Now, when we look at these Apple launches, there's two ways of looking at them. There's what is it on an annual basis, and is this going to bring people in who have even older iPhones, right? So I think you're not going to see many upgrades from last year's models, but what I do think is that given the pent-up demand the last few years, you are going to see people who are on iPhone 14s, 13s, 12s, 11s, et cetera, and earlier, potentially upgrading to this new device, because there's a lot to like here. If you don't look at it on an annual upgrade cycle, but if you look at it in terms of everything that's been added the past several years.
Mark, you've written that paragraph a million times. Bigger screens, better battery life. It's faster. There's a new palette of colours for certain products. Mark, is that going to cut it in China, given what Huawei's doing?
Yeah, I mean, I think there's two ways to look at it. There's what is the iPhone and its demand on a global basis, and obviously what's the situation in China. I'll start with China. The key thing here is that there's a new gold model, right? This new desert titanium one. And I think that's going to be quite popular in China. You've seen Apple add new gold iPhone color options in the past, such as with the iPhone 5S in 2013. They had a gold color option for the 6S a couple years after that. And that really did push new sales and momentum in China. That's a color that the consumer in China loves, especially on their technology devices, right? On the other hand, features like Apple Intelligence are missing in China. And given that Huawei, there's a lot of nationalism, they have this new trifold phone out there, I think that Apple is not in trouble in China, but they are continuing to face some headwinds there. And until Apple releases a new foldable iPhone, until the pricing structure changes, until some of the new features like AI and Apple Intelligence become available in China, things are going to be a little rocky for the company there. But if you take a step back and look at Apple and the iPhone on a global basis, there, while we're skeptical, while we see the truth and the reality that there's not a lot new here, that Apple Intelligence is delayed, that these things might not be real upgrade drivers, if you really think about it on a sensible basis, the Apple brand is still as strong as ever. People are still as interested in Apple as ever. So people are still going to upgrade. People are still going to love Apple. People are still going to be in that ecosystem. Obviously, they have the new watches and AirPods as well. So I think all things considered, we're not looking for Apple to tank here, right? But we're also not looking for a super cycle. All things considered, I think everything is going to be stable and okay for the company heading into the holiday quarter.
Mark, what's the deal with the foldable phones? Is that actually going to be the next thing?
They've been trying foldables, and when I say they, I mean the industry, for several years now. I believe Samsung launched its first foldable in 2019 or early 2020. And the problem with foldables is that they're extraordinarily expensive and they're a little buggy, right? You have that crease in the middle of the display. And Apple and their design team, they've been looking at foldable phones for many years now, but they made the decision that they're not going to release one until they're able to eliminate the crease or able to reduce it to an amount that makes it less noticeable. I personally love the Samsung Fold. If I was not an iPhone user and integrated into the Apple ecosystem, the phone I personally would have would be a Samsung Fold, because I like the idea of being able to open that up to have that larger display. If Apple were to ever release a foldable in terms of one that has a big inner display like the Samsung ones, I'd be first in line. I think that would be very exciting. Right now, it's going to take a little bit of time for Apple to get there. I think they're still trying to squeeze everything they can out of that candy bar design, and it's called the candy bar, the way that the current iPhones look. But certainly foldables are compelling, but the pricing, the differentiation, and sort of those technical problems have held back those phones from exploding into the new normal. Samsung has been doing everything it could to move into that direction, but they're still investing heavily in their non-foldable phones, which indicates that they believe there's a market for both and that there's still a little bit of time before foldables are going to become the preeminent smartphone. Right now, I believe the overall market share for foldables is low single digits, and it's going to take a while to become a real thing.
I had no idea it was the candy bar design. No idea. Did you know that? Did you know that's what it was called?
This is a pretty fat candy bar.
I did not know that. Mark, thank you, sir. Appreciate it always. One of the very best on Apple. I think you all know that. Mark Gurman, Bloomberg's very own, on the latest iPhone release. Foldable phones, the future. still?
I'm actually looking at different foldable phones, and I'm trying to understand, is it like this? Is it going back to the future, kind of the way we used to do it, or is it like this? Is it like a screen?
I've seen one use case which looked pretty cool, and I
Okay.
saw the commercial for it, when you can speak to someone who doesn't speak the same language as you, and it translates it on the other side, and they speak to you, and it translates it on your side. You seen that?
I haven't,
That's
but you know what
pretty
I
cool.
want? I want AirPods that translate, no matter where I go, immediately in real time what the other person is saying.
Right.
That's going to change.
We've got that
travel.
technology already.
Well, if we do that, I mean, you don't have to learn other languages.
Pretty
We can
cool,
just
wouldn't
get
it?
dumber, and our appliances can get smarter.
That's the future. We're all going to get dumber. Isn't that the future? Something like that. No, we're going to get more productive. That's what they tell us. More productive. Apple's down 0.7%. Coming up next, Lara Rhame of FS Investments and Jitania Kandhari of Morgan Stanley spend less time learning a language and more time doing other things.
Exactly, like playing game pigeon.
Exactly. $60 minutes away from the opening bell, and equities are in positive territory, up by 0.25% on the S&P 500, drifting higher on the Nasdaq, up by 0.3% in yesterday's session, snapping a 4-day slide on the S&P. Let's see if we can continue to improve things with the opening bell just around the corner. Here's your morning movers with Manus Cranny. Morning, Manus.
Jonathan, very good morning to you. It's day two of a pretty powerful narrative around tech. There's a reason why you're getting multiple upgrades on Oracle this morning. TD Cowen going for $180. Why? Profits up 7%. Orders booked $99 billion. But more importantly, we can do it and keep a control on the capex, the all-important number that the market is looking for. They can develop the web product and keep a lid on capex, $2.3 billion. That's about $750 million lighter than the market had anticipated. Roll it over and have a look at Apple. And you've got a juxtaposition here between the parting shot of Marguerite Vestager saying, I'll have $14 billion as a levy against you for the tax deal you did in Ireland. That's only about 2 quarters worth of MacBook sales. But this is about, I think Tim Cook called it political crap in 2016 when this came to pass. What are you dealing with here? It's we promise you AI. Have you got the patience to wait for that as a consumer on your iPhone 16? Now, I was torn at the Barclays conference whether I went with Solomon warning that we had the wrong kind of volatility in August, but I give you Wells Fargo, and this is where it gets interesting. We're constantly parsing the narrative for soft landing, no demise of the consumer. And that is what you get from the CFO, the consumer. Commercial customers, they're doing well. Deposits are performing quite well. And the card charge-off rate, Jonathan, well, that will drop in the third quarter. This is the personification of soft landing. Good morning.
Manus Cranny, thank you, sir. Let's pick up on that. Wells Fargo, Bramo, think about it. Is that just better execution from that bank, or is that a real read on this economy?
It's a good question, especially because when you look more broadly across the industry, you've seen delinquencies and charge-offs actually increase so pretty significantly. At a certain point, you have to start wondering, the top-tier banks have really isolated the consumers that they lend to the top tier. Does that really trickle down some of the delinquency numbers that we're seeing elsewhere?
You've got to wait until October 11th for numbers from the likes of Wells Fargo and JP Morgan, so about a month away. If you are just joining us, equities are positive here by 0.2% on the S&P 500. Seen lots of developments in the last few weeks in the bond markets. A real move lower at the front end of the curve on 2-year yields. We're down another single basis point at the moment. 365 is your yield on a 10-year at the moment. We're at about 370. Traders, of course, are waiting the Fed's next big data point out tomorrow, CPI data. Lara Rhame of FS Investments writing the payroll data did little to settle the 25 versus 50 basis point rate cut debate. I think they will go 25, but this is a close one. Lara joins us now for more. So, Lara, tell us how close and whether that CPI print tomorrow morning could change it.
I'm not sure that CPI is going to be the deciding factor that we're all hoping it will be. Markets like certainty going into an FOMC meeting, and this is probably one of the most split decisions that markets have had before a meeting. So I actually think that things like initial claims, things like retail sales could be more decided, could do more to decide this than the CPI data.
Lara, when we last spoke earlier in the summer, you had one cut for this year penciled in. Clearly things have changed. How much have they changed for you and your base case?
To me, they've changed because we have really seen that deterioration in the labor market that looked worse and started earlier than we had understood. So to me, it was really about data revisions. And it was also about, I think, the fact that the Fed has seen this opportunity. It's been a clearer opportunity of lower inflation that's given them this window to move. I think that's taken me by surprise. I don't think the inflation boogeyman's totally gone. I think it's just under the bed for a little while. It may reemerge in the middle of next year.
Can you elaborate on the boogeyman? Because not just in general, I'm just wondering how much you're actually still expecting. Stop laughing at me.
Don't blame me, Bramo. I'm still thinking about what your pitching game was in the last segment. What was that? Game pitching. You said game pitching or something?
Let's move on.
Okay, you move
It's
on.
a mobile
You brought me back into it. I wanted nothing to do with this.
All right, Lara, let's refocus here. This question around, you used to think that inflation was actually going to remain a lot higher going forward than it has been in the past. And a lot of people saying that maybe some of the recent economic data highlights that actually you are seeing the lag effects in an economy that is actually more susceptible to rates where they are. Are you starting to challenge some of your previous conception of where the neutral rate really is?
I think I'm looking at two big pieces of the inflation picture. One of them is that goods piece, which, let's face it, has been really helpful with a massive deflationary impulse right now. But we haven't had the classic goods cycle in this business cycle, in this expansion. I think that could very well come. Think about a big series of Fed rate cuts. It does two things. It reignites the housing market, which gives us shelter inflation, and it also reignites that goods cycle. I think one of the reasons that we've seen, and I think this is what I'm looking for in the CPI tomorrow, is auto prices, which have come down a lot. The near-term indicators show that's turning. A lot of the good news on the goods sector may be behind us on the inflation front.
Given that, and given the fact that we are still seeing good news with respect to grocery prices, et cetera, do you still think there's the same liability if the Fed cuts by 50 basis points, by even the 100 basis points that some are pricing in right now into the markets this year, that could reignite inflation? Or are you less concerned about that now, that actually is the policy error that it might have looked like, say, 2 months ago?
You know, to me, the inflation picture is less about near-term Fed rate hikes than it is just about some of the structural problems that, you know, blame it on past policy, blame it on demographics. The reality is, in the middle of next year, we are going to be facing new pressure on shelter prices. There's a reason that investors are going all in on multifamily right now. We absorbed all those excess units. We have seen the vacancy rates down again, and we've stopped building apartment buildings. Middle of next year, that is going to reflare as an issue either with higher rents or with higher housing prices, depending on how far the Fed goes. I think to assuage markets and maybe the business sentiment that controls hiring, front-loaded cuts aren't a bad idea. And when you sort of compare this to the mid-90s cycle, they cut, you know, pretty quick succession, and then they waited to see what impact their cuts would have. I'm in the base case that the economy's okay. I think they've got the room to do some front-loaded action. You know, we've seen the real Fed funds rate creeping up. Let's get that back down again. But then they will have time to sort of recalibrate in the new year, especially with new policy coming on board, given the presidential election.
Well, you mentioned policy, so quickly let's go there to get the debate tonight. Is that actually more important in your mind about where 2025 goes and the future of the U.S. economy?
I'm not sure that the debate per se is going to be as impactful, but I think both candidates are clearly focused on pro-growth policies that are going to be inflationary in one way or another. So it's another reason why I think markets are underweighting the impact of those pro-growth policies in the beginning of the year. But I think it's a very long road from what we're seeing on the debate stage, what the mix of Congress is going to look like, and what we'll actually be able to put into practice.
So what do you think the bias will be ahead of that, Lara, just to pick up on that? Is that going to be to buy bonds, to sell stocks, sell and ask questions later?
You know, I think this bond rally has gone as far as it's going to go. I think we've really now seen the 10-year overbought. Hey, say the Fed cuts rates down to 3.5%. Where's the 10-year going to land? Probably around 4% if we renormalize the yield curve. So to me, the bond rally's gone really far. I think for the equity market, volatility is going to dominate because from here, so much good economic news is priced in. We really are now just relying on this super concentrated index and a lot of volatility around companies that are really trading at a very leveraged basis at this point.
Lara Rhame. Lara, thank you. Of FS Investments. Let's continue this conversation with Jitania Kandhari of Morgan Stanley. Jitania, good morning to you.
Good morning.
Thanks for joining the programme. Let's just extend that conversation. The limits of this bond market rally. We've had a big move last week of almost 30 basis points lower on a 2-year yield. The 10-year yield dropped by close to 20 basis points in a single week. We've seen a big move lower through the summer as well. Are we reaching the limits of this bond market rally?
I think so. I think we maintain models and we think it's overshot on the downside. Pretty much if you have a Fed funds rate of 3.5%, which I think is close to the natural neutral rate on the nominal side, and typically post-cutting cycles, if you have the yield curve pricing in another 50 basis points on the 10-year, 4%, anything lower than that seems to be like overdone.
You mentioned 350. Do you think we're actually quite well priced already for 200 basis points worth of easing?
I think on the last couple of years, the market's pricing any kind of move in the market in an extreme way. So we are really well priced on that, I think. And what I think is important on the inflation side, a lot of our work is suggesting that the next few months, inflation, the pace and path of inflation is going to get a little more difficult in terms of the disinflationary trend. So it may just stabilize here. So you may not see consistent prints down. What's going to happen beginning of next year? The 2004 beginning had a very high base effect because of high inflation. So beginning of next year, inflation is actually going to be better and trend down more. So I think that's the path I'm working with, and from that perspective, Treasury seem to have overdone.
They might have overdone, but that doesn't mean not to own them in the same kind of way. You have an interesting point about 60-40, that we're going to see kind of a reversion back to that kind of balance in terms of opposite reaction to stocks. How much can you lean into that story, given the fact that you have already seen this huge rally? Does it still stand?
It still stands because the most important reason the 60-40 did so terribly in 2023, when this combination was down 17%, was because stocks and bonds correlation got positive. And history suggests that whenever inflation is above 2.5%, stocks and bonds, this is for the last 75 years, stocks and bonds correlation gets positive, which is taking away the diversification benefits of bonds. Now, with inflation coming down below that level, that correlation will reassert its negative relationship. And I think in an overall asset allocation portfolio, that's a more structural long-term portfolio that gives you the benefit of having that hedge with the duration in case the outcome on the economy is worse than the consensus soft landing.
How hard of a sell is that right now, given how scarred people were over the past few years and some of the losses that you saw in bond portfolios and some of the questions people have around the deficit, around some of these other sort of structurally higher inflation types of regimes that some people are talking about?
Yeah, I think the question on the 60-40 was a bigger question in 2024 because 2023 was such a worst outcome for that combination. I think at this point there is more recognition that that may be a good allocation. But what people are doing and what asset owners are looking to do is think about what in that 60-40, right? Whether if it's 40 in U.S. Treasuries, let's look at emerging market debt. If the dollar is weak and interest rates are coming down, then the local bonds in the emerging market world will do well. So what within that 40 is an interesting question. And what within that 60? Interest rate differentials, growth differentials that have worked in favor of the U.S. all along now seem to be peaking in favor of the non-U.S. world because the pricing in the U.S. interest rates is much more aggressive than many other markets in terms of rate cuts. So how do we look at the ex-U.S. universe, even in the equity space, is another important consideration within that broader allocation.
So can we go deeper into that idea? What do you like within the 60, within the 40?
Yeah, so, I'll start with the U.S. clearly, we've liked the equal weighted index because we think concentration is extreme, peak multiples, peak earnings in some of these technology stocks. Within US, we do like pockets of industrials, financials with the yield curve steepening. We really like pockets of Europe because there are idiosyncratic reasons, but also structural reasons. The world is industrializing. A lot of the industrial companies are in Europe, trading at very cheap multiples. We like pockets of Japan that are leveraged to an appreciating yen because we think that the path for the yen is up. We do like several emerging markets like India, Southeast Asia, that are also more consistent growth
You're not
stories.
mentioning China.
Yes, I've been a bear on China for a while. I think China has three problems. It has the excessive debt, it has a demographic headwind, and it has a deglobalization headwind. I mean, look at what it's doing. Like, it wanted to raise consumption, but it's ending up following the industrial policy again, dumping goods in the world because that's the only engine for growth in terms of the export side. The domestic economy is laden with unproductive debt, which is slushing around the system without a cleanup act. So that continues to be something that may have some tactical runs, but not a structural story for asset allocation.
Can you reconcile that with your more constructive view on Europe? If you don't like China, how can we like Europe? Isn't that just a play on China?
So, Europe, of course, the consumer story in Europe and the brands, the luxury brands, that has a problem. And some of it is getting priced in pretty decently with respect to current valuations. But I think in some of the global themes today, which is whether it's defense capex, it's industrial automation capex, it's resilience capex, substitution capex. Some of the European stories are linked to that, and pockets of energy, materials. UK has a large part of metals and materials kind of companies. So I think scattered around, it's an active time for active management. You really need to kind of pull the thematic leaders from these different countries.
We've all heard these arguments a million times, of course, and the question I always sort of go back to is valuation gap or valuation trap. What are they doing right now that deserves the premium you think these companies demand? How are we going to attract that kind of capital back to Europe, back to the UK, given how they've squandered it for most of the last few decades?
So in certain pockets of Europe, the earnings inflection is happening. So it's not a valuation trap when there's a catalyst to unlock that value, right? So that's what we're focusing on. And I think when you talk about valuation, you really have to think about equity valuations and currency valuations. So the dollar now is really extended. And as I said, the rate differentials and the growth differentials that have favored the dollar all along in the last few years, that's now going to favor the ex-US universe. And work suggests that nearly a third of returns on average come from currencies. So taking that nuanced currency view across international markets is another big part of.
Can we explore that just one step further? If that big dollar long that's been accumulating over the last few years, which essentially that's what it is, it's a massive dollar long at the expense of the rest of the world into dollar-denominated assets. If that begins to unwind, there's a whole host of people out there, deep thinkers, who think that maybe you engineer moves of like 10% in the Chinese currency, big moves, say, in the euro as well. Do you think about it the same way? And what kind of destruction would that cause for the US assets that money was originally in?
Yeah, so dollar is not an emerging market currency, right? It's not that, it's not a currency that's so volatile. I think if you plot a long-term dollar price, it trades between that 10 to 15% band. So I think there will be counter-trend rallies. We're probably, at a point on the tactical side where the dollar, a little more weakness could get a counter-trend rally on the upside. But I think the home bias in the US, with just US assets, US domiciled assets, that probably that shift, if that were to come, should lead to some assets moving away from the dollar. Not something that dislocates and calls for a demise of the dollar, because it still is the reserve currency. It still has the exorbitant privilege. But I do think that dollar weaknesses have happened, like in the 2000 decade when international markets did better. I think we're getting to that point.
We used to come over here and basically chop everything in half. Do you remember that? 50% off. You won't remember that. As a Brit coming to America, used to come here and just do 50% off. It was 2 for 1. Great times. Great times. Obviously, I live here now.
It was the other way around, by the way.
Yes, I was speaking to our producer Jamie about that, and Jamie was talking about the other way around, how expensive eating was in London
It was
back
ridiculous.
in the day.
It was absolutely absurd. And now that's why the US can't get enough of everything European.
Exactly.
Because you're on sale.
Yeah, in a big way. I live here. I'm one of you. Jitania Kandhari of Morgan Stanley. It's good to see you. Thank you. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Huawei unveiled a $2,800 phone that folds twice, just hours after the iPhone 16 debut. With Apple and others pushing for AI features, Huawei is instead focusing on hardware engineering. It's dubbed the Mate XT. It took over 5 years of development and promises to go from a regular smartphone to a 10-inch tablet that can fit into a pocket when folded. Both the Huawei device and the iPhone 16 are set to begin in-store sales on September 20th. The chairman of Southwest Airlines is stepping down, a major shakeup for the low-cost carrier. Activist investor Elliott Management has been calling for a strategic overhaul at Southwest. The firm accused Southwest of failing to modernize operations and falling behind on competitive challenges. Executive Chairman Gary Kelly will voluntarily retire from the board after the 2025 annual meeting. 6 other directors will depart the November board meeting. A crew of 4 private astronauts headed to space this morning aboard a SpaceX Falcon 9 rocket. The mission aims to conduct the first fully commercial spacewalk, testing spacesuit technology developed by SpaceX. The capsule is intended to fly an elliptical path around the Earth at a maximum distance of about 870 miles. That is the furthest flight from the surface of the Earth since the Apollo program ended in 1972. And that's your brief, John.
Danny, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day and the week ahead and get you a preview of the big debate in Philadelphia at 9 p.m. Eastern Time. Stocks positive by, let's call it, 0.25% on the S&P 500. The opening bell 38 minutes away. Counting down to that cash open. The agenda, the day ahead, the week ahead looks like this. At 9 Eastern tonight, Vice President Kamala Harris and former President Donald Trump facing off in their first debate. Wednesday, the Fed's next big data point, it's US CPI. On Thursday, we'll get PPI plus another round of jobless claims and an ECB rate decision. Then from there on Friday, we get UMich sentiment. Harris and Trump a meeting on the debate stage for the only scheduled debate so far. A preview from Mike Shepard of Bloomberg down in DC. Let's get to it right now. Mike Shepard, welcome, sir. Shep, walk us through what we can expect from today and whether we should really believe ultimately this will be the first and only face-off between the two.
Well, whether we'll see another debate will depend largely on how things unfold on the stage tonight. If either side sees a real big downside in doing a rematch, then this will be it. And we'll have to see how this unfolds. We're going to look at this really on 2 levels. One will be on the substance. We're going to want to see Kamala Harris, the vice president, introduce herself a little bit more to the voting public. She's only been at the top of the ticket for less than 2 months. And even though she's been vice president for nearly 4 years and a sitting U.S. senator before that, most Americans don't know her quite as well as her boss, President Joe Biden, and certainly not as well as former President Donald Trump, who's opposing her in the November 5th election. And what we want to see from Harris also is how she handles being on stage with Donald Trump. The two have never met before, let alone debated before. So how she interacts with the former president during this meeting tonight will be very interesting. And we'll want to see whether she deploys some of her skills as a former prosecutor in engaging Trump during this debate.
Shep, you mentioned that she really needs to introduce herself. There's only 8 weeks left to the election. And in a swing state, a crucial state like Pennsylvania, shortly after the debate, people are going to be able to vote early. Did the campaign squander the moment with not putting out her policy proposals earlier? I mean, just this weekend, we got that tab on her website for her policy proposals. She's only sat for one interview, and now they've only agreed to one debate.
Well, Anne-Marie, in fairness, it is a bit of a crash course for her in the campaign. They had been in position to be Joe Biden's understudy really until June 27th, when the president really struggled in his debate with Donald Trump, and which ultimately set the stage for his exit. They have been unveiling various proposals, including a tax package that came out last week that offered a little bit of more detail of what she would do and offered a contrast as well with the former president. For instance, on taxes, Donald Trump is calling for a 15% corporate tax rate. He is also promising individual tax cuts and tax cuts for retirees as well. And we're also expecting from him other measures that would be favorable to corporations. Kamala Harris, by contrast, is offering a 28% corporate tax rate.
A pretty conditional tax rate on the Trump side as well. A lot to work through here, Shep. Looking forward to the coverage, of course, through this evening and into tomorrow. Bloomberg's Mike Shepard down in D.C. in anticipation of the presidential debate at 9 p.m. Eastern Time. Plenty of reaction tomorrow morning. Our lineup looks like this. Cameron Dawson of New Edge, Mike Wilson of Morgan Stanley, Libby Cantrell of PIMCO, and David Kelly of JP Morgan Asset Management. I did not realise that Game Pigeon was a real thing.
Oh, yeah.
Didn't realise it was a real thing.
They've got, ping pong.
For the last 30 minutes.
What are you doing? Really? Basketball? I'm really bad at that. I'm bad at all of that.
Is that what you do when they talk about politics on this show? Play Game Pigeon?
No.